This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved the soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast. Tom Keene off yet again today. David Gura, though, sitting in for Tom Keene. How's it feel to be in the
winter Monday?
Yes, exactly.
The summer Friday of the winter. It's good. Glad to be here.
Glad to be a lot happening here. We got on the political front domestically. We got a lot of economic data coming out, and then just of course economics, finance, and business. A lot going on here. Bloomberg Surveillance today. It is brought to you by BAM. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. We got futures looking a little bit negative here. Let's kick everything off this morning with Lisa Mateo. Lisa Mateo, what do you got for us here in the Bloomberg Business Flash?
All right, well, we've got futures kind of showing signs of a pullback from the S&P 500's record close on Friday. Right now, S&P futures down about 0.1%, 7 points. Dow futures, little change, down 33. We have NASDAQ futures down about 0.1% or 26 points. We have the two-year yield at 4.19%. That's up 3 basis points. The yield on the 10-year, 4.21%, and that's up 3 basis points. We have the Bloomberg Dollar Spot Index up about 0.4%. Japanese yen, euro, British pound weaker. We have Bitcoin down more than 2.5%, around 95,000. Looking ahead, yes, the monthly jobs report comes out Friday. Could provide some information about whether the Fed will cut interest rates again at its two-day meeting that wraps up on December 18th. We have shares of Stellantis this morning. They are lower. ADR is down 9%. Its CEO, Carlos Tavares, he stepped down earlier than expected after a dispute with its board. Then you have Volkswagen workers across Germany. They've begun temporary walkouts. This is after failed cost-cutting agreement talks with its management. And Tesla, BYD, offering further incentives in China to meet annual sales targets. That includes 0% loans and cash discounts. That is Bloomberg Business Flash. Over to you, Paul and David.
Lisa, thanks very much. David Gura here in for Tom Keene with Paul Sweeney, and some news out of Washington. President Biden, in between spending Thanksgiving in Nantucket with his family, heading to Angola on his presumably last trip overseas as President of the United States, executed his power of the pardon, offered a full and unconditional pardon to his son, Hunter Biden. He said in a statement, "No reasonable person who looks at the facts of Hunter's cases can reach any other conclusion than Hunter was singled out only because he is my son, and that is wrong." He was due to be sentenced in a case in Delaware on December the 12th. He also pleaded guilty in a separate felony tax case in September, was due to be sentenced for that as well. Derek Wallbank joins us now, managing editor at Bloomberg News. He's been tracking all of this. And Derek, help us out with the timing here. There were a few weeks left, of course, in Joe Biden's presidency. Why did he decide to do this now, do you think?
Well, David, it's a great question. And look, I think it bears mention, and you touched on this, but it bears emphasizing this is something that the White House had said emphatically it was not going to do, right? The president had said a number of times, a lot of White House staff had said a number of times they were not going to have a pardon issued for Hunter Biden. Indeed, though, where we sit right now, right at the start of December, we're looking at just less than 2 months into the term, or left in the term. And Biden has put out a full pardon for Hunter Biden, not just for the things that he has gone to court for, but a somewhat blanket pardon covering a quite wide range of dates. So anything else that may have been in the hopper or that Republicans may have wanted to pull him in for further questioning on would also presumably be covered by this action.
So, Derek, this, again, the timing, as David suggests, a little bit odd here. There's still some time left to go in President Biden's term here. What's the political fallout here for President Biden? Is he at a point in his career, in his life, where he's willing to make those trade-offs?
Well, look, Joe Biden's not running for anything, right? His last campaign is over. So his political fallout is negligible, and it may not matter. It's a legacy issue for him politically, right? I think for a lot of other Democrats, though, it does become a question because there has been a substantial amount of Democratic complaint about Donald Trump and the seeming favors that he has done for his family and for his close political allies. And this does sort of put a lot of those Democrats in a tough position. We've already seen Colorado Governor Jared Polis come out and question this decision. I do think that this is going to be one of those things that Democrats are going to be asked for their take on, in much the same way that Republicans were asked what they thought about Jared Kushner and Ivanka Trump having such a big role in Donald Trump's first term, right? But obviously a pardon is somewhat of a different level than that. It is not unheard of for presidents to pardon people who are very close to them.
Right.
This is certainly, though, not a thing that happens all the time. So there is some question of norms. And again, as I said, this is something that Biden had said repeatedly he was not going to do. So it is a full reversal.
All right, Derek, thank you so much for joining us. Derek Walbank, he's a managing editor of the Bloomberg News, just giving us the latest on President Biden pardoning his son, Hunter Biden. Let's get back to these markets here this morning on this Monday morning, Cyber Monday. Just a little bit of red on the screen here, S&P off 6 points. I think for a lot of folks, the question is kind of where do we go from here? We've had an S&P 500 up 25%. We've had positive returns in the bond market. Where do we go from here as we think about 2025. Quincy Crosby joins us. She's a chief global strategist for LPL Financial. Quincy, thanks so much for joining us here. We're pretty much through earnings, which were decent, I think, for most strategists looking back at the S&P 500 earnings. We've got a Fed that seems to be cutting rates. A question about to what degree and how quickly. We've got, obviously, a new administration coming in. What's your view when you talk to clients about 2025 here? How do we get positioned?
They're fairly optimistic about 2025. They expect to see more manufacturing as capital expenditures pick up now that there's some certainty. However, they are still concerned about the effect of tariffs and whether or not the president intends to go full throttle with the tariffs, or is it a negotiating ploy or tool. That's their major concern because, of course, they're worried about inflation kicking in yet again.
Quincy, they turn to you and all of your experience, including that of those 4 years when Donald Trump was president before. And I wonder sort of how that frames the way that you look at what he's saying, or maybe better yet, writing on social media about tariffs and about currency. How is that sort of giving you a sense of sort of the thrust behind what he's putting out there? If it's in fact a policy proposal, if it's a pronouncement, if it's just him kind of adding more bluster before he gets to the negotiating table?
Well, one of the things you have to look at are the sectors that you think are going to do well, regardless of what he does. So we like industrials, for example, including within industrials, you've got defense companies, and we expect to see defense spending picking up. Although what he intends for the government, they're going to be much more careful about overruns and costs and so on. But defense spending is going to pick up globally, and much of it is going to come here to the United States. So that's within infrastructure. We expect to see data centers continuing to be built globally. And ultimately, we're going to see more data centers here in the U.S. Virginia, for example, is seen constantly as the #1 data center example for how data centers are built. But that is going to be important. And in addition, we'll probably see more construction. As long as rates come down, we'll see more home building. So we're going beyond what could happen, what might happen, and we're watching to see what the Fed is going to do in terms of rates overall. It's the only thing you can do during a period of uncertainty.
So, Quincy, it seems like the Federal Reserve is focused maybe a little bit more on the labor market than perhaps on inflation. And, of course, this will be a big week for labor. Get non-farm payrolls later this week on Friday. Street's looking for 200,000 change in non-farm payrolls. What's your thought on this labor market and how the Fed may proceed from here?
Well, the Fed has said, Chairman Powell has said he's going to be speaking this week, by the way, and it's going to be important for the market, is that if it cools too much, he's used the word deterioration, they're going to come in and cut rates. It's going to be very important for the Fed. They're going to do it, but no one sees that at this point. The initial unemployment claims have been healthy. Continuing claims have inched higher. People are having a more difficult time getting new jobs. There's no doubt about that. But overall, the expectations of 200,000 new jobs is tremendous. included in the consensus estimates is that wages will come down just a bit, which will be helpful for the Fed. The concern would be that wages climb higher and companies try to pass along the higher prices again to the final buyer, the consumer, retail consumer, or businesses. So you've got a strong underpinning for the economy. Consumer spending continues to kick in. However, and I think this is important for the Fed, is they are worried about lower wage earners, and they are worried about small business owners who are the backbone for hiring in this country. And if you tilt over to their thinking about that, perhaps we get this 60%, 65% now futures market regarding what the Fed is going to do on December 18th.
All right, Quincy, thank you so much for joining us. Always appreciate getting a few minutes of your time. Quincy Crosby, she is the Chief Global Strategist at LPL Financial. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. President Joe Biden has pardoned his son. That spares Hunter Biden a possible prison sentence for federal felony gun and tax convictions. President Biden had previously said he would not pardon his son or commute his sentence after his convictions in Delaware and California. The move comes weeks before Hunter Biden was set to receive his punishment after his trial conviction in the gun case and guilty plea on tax charges, and less than 2 months before President-elect Donald Trump is set to return to the White House. After his family held out hope for over a year their son might be among the remaining living hostages, we are learning this morning that Omer Maximum Nutra, who has dual citizenship in the U.S. and Israel, was among those killed in the Hamas attack. Nutra was a soldier with the Israeli Defense Forces and had not been seen or heard from since October of 2023. Nutra would have been 24 years old this year. For some people, this is one of the most stressful times of the year. Family gatherings, work parties, eating too much, getting dark early, and spending hundreds of dollars all at once. Psychiatrist Dr. Jua Smalls-Monte says there are ways to keep the stress and anxiety in check. First, she recommends trying to figure out what's causing the most stress. Now, if you don't like interacting with some people at a party that you just can't stand, Dr. Smalls-Monte recommends limiting those interactions.
Be courteous. Say hi to that family member, but you don't have to engage in a long conversation. Maybe saying, oh, I'm doing well in work, or things are going along fine, and you can leave it at that.
Dr. Smalls-Monte speaking to ABC. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. David Gura sitting in for Tom Keene. How was Thanksgiving, David?
Great. We did see Moana 2.
You
and
did?
As Tom forecasted,
now,
it cost
did
about
Lisa Mateo see
$250.
Moana 2?
I did not.
I did not. All right, so you're in a Moana heavy household.
Yeah.
So
Moana heavy, and I was intrigued by, I saw the reporting that Bob Iger wanted to take this from being a TV series into a movie sequel. He thought that would get your double bang for the buck, being in the theater and streaming. Indeed, it seems like it did. I mean, the money that came in to see the movie over the weekend was insane.
Yeah. So
and it was fine. I mean, it was content, pure and simple. Like,
right.
It hit all the marks, and everyone walked away happy.
Was everybody happy walking out?
And I had the cocktail and all that anyway.
Yeah. Oh, so that's right. Because you do that stuff in Brooklyn. That's how they roll in Brooklyn. So exactly.
But it was the biggest Thanksgiving opening in Hollywood history.
Crazy.
Like, it was huge.
Yeah.
So people, I mean, it just tells you people, I think they want to go to the theaters. You give them some reason to go, and they'll go. So there's a Moana review from David Gura. Futures, absolutely nothing happening. I'm calling it unched across the board. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit IBKR.com/forecast. Get started today. All right, we've really got little movement in futures. This is after stocks finish off the holiday shortened week with another record on Friday. The S&P notched its best month in a year, posting its 53rd all-time high of 2024. The NASDAQ 100 had its strongest monthly gain since June. Let's start with NASDAQ futures. Little change, down about 6 points. We have Dow futures, little change, down 16. S&P futures down about 4. The 2-year yield, 4.19%, up 4 basis points. A yield on the 10-year, 4.21%. That's up 4 basis points. We have Brent crude up more than 1% at $72 a barrel. WTI crude, $68 a barrel. We have spot gold lower at $2,643 an ounce. Shares of NVIDIA, they're down about 0.5%. We had the Biden administration. They unveiled new restrictions on China's access to vital components for chips and AI. It also blacklisted about 140 more Chinese entities. And Amazon founder Jeff Bezos, he's joined Samsung, investing $700 million. It's an AI chip startup with hopes of taking on NVIDIA. The company is valued at $2.6 billion. And Elon Musk has asked a federal court to block OpenAI's conversion for a for-profit business, claiming that it's going to hurt its own AI startup and the public as well. But OpenAI says the filing was without merit. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, and we're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. I don't know, fixed income market. I feel like I can just sit around in my 2-year U.S. government treasury bond and get 4.2%. I don't need to be a hero and take credit risk. I don't know. Some people may want to take a little bit more risk. Kathy Jones may be one of them. She's Chief Fixed Income Strategist for Charles Schwab. She joins us here in our Bloomberg Interactive Broker studio. So, Kathy, we sit back here. Fixed income actually has some green on the screen in total return in 2024. You guys actually made some money this year in fixed income. 2022, brutal. Let's be honest. What do we do in 2025? Because there's a lot of unknowns out there, Kathy.
Yeah, I would say when we were putting together our outlook this time around, we try to model out various factors. And this is probably one of the hardest years of my career to model out because there's so many policies that are up in the air that it's really hard to predict how it's going to come out. But our status is really that the rates have very little room to go much lower at this stage of the game. We should get a couple of more Fed rate cuts, but not nearly as much as we were expecting before. And long rates are kind of well priced right here. If you look at the 10-year yield, it's probably pretty close to fair value. And then you have all these uncertainties, which is the word of the year, I think, around trade, tariffs, immigration, taxes, all these policies that could affect the growth and inflation outlook that keeps us kind of cautious.
Sean Donnan and Anna Wong here at Bloomberg have a great piece out kind of tapping into that uncertainty and looking at sort of how this might play out when it comes to tariffs, when it comes to trade policy. They write that the drama has started immediately. Tariffs may build more gradually. What is your sense of how this rolls out? And I know there's a lot of speculation about how inherently inflationary a lot of this might be. How are you thinking through, A, again, how the policies are rolled out, if in fact they are, and B, what that might mean for inflation in this country?
Yeah, I think there's the one basic question is this a negotiating strategy or is this for real? So far, it sounds like it's for real. It sounds like something the president-elect believes in. And so some sort of tariff is likely to be imposed on somebody early on. We're assuming China will be first up. We may get some negotiations on Mexico, Canada, et cetera. But some level of tariff seems likely to us. So we're looking at that as a one-time shot on inflation. So it doesn't necessarily build inflation over time, but it definitely will raise the price of those imported goods. At the same time, it tends to slow economic growth. So you have this kind of dueling force that comes from tariffs, but we are assuming some inflation impact, at least in the early part of the year, middle part of the year.
I mean, to me, it seems like from an inflation risk situation, The actual immigration policy might be the most impactful, it seems, because I just know a couple of restaurant owners that I know in town. They're saying for the first time in several years, they're fully employed. Their kitchen, they got everybody they need in their kitchen, their dishwashers, the busboys and all that kind of thing. And I don't know, you take that away and that could be problematic, because I would think that's a relatively big part of the nation's labor force at this point. How does that work?
Yeah, if the proposals that have been put on the table were implemented, we'd probably lose about 8%, up to 8% of the workforce.
Wow.
That's a lot in an aging workforce with people my age and older retiring out. That's not an announcement, but that's going to happen. It is happening, the baby boomers, and you need workers to replace them. So far, in recent years, it's been immigrants who have replaced them. So you end up with this hole in the labor force, and you can't grow as quickly. So on the one hand, wages would probably have to rise to attract people who aren't in the labor force. On the other hand, you can't grow as fast because you don't have the workforce to produce goods and services to grow faster. So it is, I would agree, longer term, it's a bigger issue probably than tariffs.
We're all dealing with this uncertainty. You're doing it in your outlook, and certainly Fed Chair Jerome Powell is doing it too, even if he's so studiously shied away from talking about it at the last Fed meeting. He's got another event this week, a moderated sit down on Wednesday, and then we're looking ahead to the next Fed meeting after that. Does he have to address this more the way that he and his colleagues are thinking through all of the uncertainty? We're going to get that summary of economic projections at the next meeting. How do they factor in all that we don't know of what might happen here in the months ahead?
Well, I do think the dot plot and the rest of the summary of economic protection is going to be really interesting this time around, and certainly will change because if you think back to September, it was an entirely different kind of economic outlook and political outlook, policy outlook. So I think it will change. I think they're probably busily trying to model out some of these things themselves and figure out what that means. But I doubt that he will talk about that at this stage of the game. We'll find out about that later. But my assumption is they're going to be much more cautious about rate cuts than they had been before because A, the economy has been more resilient than we thought in September, and B, we have all these uncertainties on the horizon.
Year to date 2024, the best performance in your world fixed income, U.S. corporate high yield and U.S. leverage loan index. That surprises me a little bit because I know there's concerns throughout the year of maybe recession, yet the riskier parts of the market were just really performing.
Yeah, well, we did have a more resilient economy, so that helped. And it's the power of the coupon. So if you have a coupon of 6, 7, 8%, and even if things sort of hold steady, you're going to perform pretty well. And I think this year, when you look at the total return of various asset classes, a lot of them are in line with the coupon, the average coupon of the year, and that's kind of what we're looking at.
Can I ask you lastly just about the strength of the dollar going forward and what you're thinking about when it comes to Forex and currency? And we had this kind of another announcement over the weekend from the president-elect about BRICS countries trying to rival the dollar. Kind of wonder where that came from. I'm sure we'll talk about that more when Damian Sassower is here in a bit. But what's your sense of sort of what dollar strength looks like if these policies, if immigration and tariffs, if those policies are put into effect, what does that mean for the U.S. dollar?
It means it stays strong or goes higher. It'd be very difficult for the dollar to push the dollar down at this stage of the game if you have those sorts of policies in place. And, you know, the dollar is near, if you look, I use the Bloomberg dollar index. I prefer it to the DXY myself because it's more broad-based. It's nearly at a 15-year high. We're almost back to those spike highs in 2022. And that's driven largely by the outperformance of the economy and the wide interest rate differentials. I doubt those things will change in 2025. And actually, tariffs will only give it another boost to the upside.
Kathy, thank you so much for joining us. As always, appreciate it. Kathy Jones, she's Chief Fixed Income Strategist for Charles Schwab. The fixed income folks actually making some money this year. We love that, man, because now people want to talk to them at cocktail parties. Before it was like, you know, what have you done for me? But now they're putting up some nice numbers, particularly on the riskier side of the market. Again, high yield leverage loans, where I made a nice amount of money back in the day with the Chase Manhattan Bank leverage loans. North of 8% total return this year. Pretty solid numbers there. That'll get you this 10-year Treasury yield. I'm sitting right at 4.20%. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pretty much treading water. Traders looking ahead to the U.S. labor market data later this week. Also this week, we have a read on manufacturing, construction spending. That's today. Car sales figures tomorrow. Factory orders, durable goods orders on Wednesday. So right now we have NASDAQ futures, little changed, up about 10 points. Dow futures down 21 points. S&P futures down 2. The 2-year yield, 4.19%. That's up 4 basis points. The yield on the 10-year, 4.21%, and that's up 3 basis points. Two currencies, the Bloomberg Dollar Spot Index up about 0.4%. The Japanese yen, euro, British pound weaker. We have Bitcoin down more than 2.5% at around 95,000. A few companies making news. That's De Beers. It cut its diamond prices by more than 10%. That was across the board. And this comes as the diamond industry has really been struck by one of the deepest, longest slumps in decades. And some deal-making news. Sources say BlackRock nearing a deal to buy private credit manager HPS. That deal may come this week. It could value the private credit manager at $12 billion or more. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. The appointments from President-elect Trump continue to come fast and furious. Kash Patel, FBI director appointee, is probably one of the latest over the weekend. Henrietta Treyz joined us. She's a managing partner at Veda Partners. Henrietta, again, kind of putting some of these appointment selections in context. What is President-elect Trump trying to do here with his cabinet? What is his strategy, do you think, at this point?
I think it's definitely signaling that he wants to hit the ground running as soon as he gets sworn into office, January 20th. The most important things to me are the nomination of Kevin Hassett and Jameson Greer. Those are the names that were floated last week for USTR, which is going to be most critical for putting the tariffs into place. We know we have the Treasury Secretary into place. Some of these other names, whether it's RFK Jr. or Matt Gaetz, and those guys are sort of fallen by the wayside or will be contentious as they go through, as I imagine Kash Patel will be as well. But I would say keep our eyes on the prize, focus on USTR, and see also that they're potentially telegraphing to businesses to prepare for these tariffs in advance, as opposed to waiting for January 20th and an implementation date of additional tariffs. That's maybe the biggest thing for me right now with the early naming of these nominees.
Let's take each of those in kind. Let's start with Kevin Hassett. He was in the first Trump administration. He came up with this thing called the Hassett Principle when it came to tariffs, sort of focusing on where those tariffs might be applied, who might be exempt from them. How does his work change if he's now a part of this next administration? I mean, I look at just sort of the panoply of people that the president-elect has picked to be on his economic team, and we've seen kind of the fighting early on before they were even named, and one wonders if that's going to move over into the cabinet room as well. But sticking with Kevin Hassett, what role does he play in shaping the direction of Donald Trump's economic policy in this next term?
The most important thing to me right now is that he has a relationship with lawmakers on Capitol Hill that exceeds that of Scott Bessent or Howard Lutnick. And I think when I am worried about next year is obviously the tax bill and then the tariffs that are part of that. In that Donald Trump has said the tariffs will pay for the $4.6 trillion extension of the existing tax rates. So when when Hassett is up on the Hill trying to talk with staff and get this tax bill written, one of the key components that he's going to be involved in is getting them to agree to include tariffs in the tax bill. That's a very big deal. That's the only way to score it so that tax legislation can be physically offset in the same piece of legislation by the tariffs. So I think Hassett will play a really important role there, as will the USTR.
Henrietta, what's the role of the United States Senate here in confirming some of these nominees, particularly some of the more contentious ones that may be coming down?
You know, they were pretty much already trying to compel the Trump administration to give them names that can get through quickly. We know that historically you get through, the Secretary of State, Defense, and Treasury pretty quickly, just days after the president is sworn in. So they're trying to, sort out the wheat from the chaff as early as possible so they can keep their eyes on the prize, get started on the president's agenda as soon as he gets sworn into office. So I think a lot of their backroom discussion is trying to say, look, thank you for giving us these names. Some of these guys cannot get through. I think it's underappreciated how slim the Republican margin is going into next year. We have a number of senators who are going to be up for re-election or potentially retiring or have come in as freshmen who will be willing to challenge the president on these nominations, as we've already seen.
We're back playing this game of trying to keep track of all of the social media posts from the president-elect, and one of them from a few weeks back had to do with recess appointments and him urging senators to allow for them to happen, presumably because that would forestall having to go through a lot of the confirmation process where, perhaps some controversial material might come out and things could get gummed up. Where does that stand? How resonant was that message from the president-elect with Republican members of the U.S. Senate?
The United States senators do not like to be told what to do. I can tell you that firsthand, having worked there. I think a lot of the enthusiasm for the recess appointment idea came from House members who are much closely tethered to President-elect Trump. So you saw a lot of support for the idea from House Republicans in Trump's orbit, but major pushback from the Senate. They don't go on recess specifically for this reason, that and the pocket veto. So I do not expect the Senate to voluntarily step aside. And I think even if the president tried to force the issue, which is allowable under obscure clauses of the Constitution, the House and Senate would collaborate to make sure that didn't occur.
Henrietta, what's the concern, if any, in Washington about some of the experience levels for some of these appointments? Some people are questioning whether they are appropriately experienced to run some of these larger institutions in Washington. Is there a feeling developing in D.C.?
What I hear is a lot of agita from, the Defense Departments, for example, about some of these incoming appointees who have real axes to grind and want to get rid of Navy admirals, for example, or, get rid of major prosecutors at the FBI. That conversation, that narrative is obviously very real. I think you saw it with President Biden's decision to pardon Hunter Biden. They're taking this very, very seriously. The names that Trump is putting out there are the names of folks who have advocated, mostly on Fox News for years now, for really aggressive change at the admiral level, in military ranks, getting rid of any of these, seasoned Army generals who maybe were too quote unquote woke for the Trump administration and the people that they're about to announce. So there's a lot of consternation within those specific military groups. And I think that's probably the most noticeable thing I've picked up in the last couple of weeks.
You mentioned a few minutes ago Jamieson Greer, who is a Bob Lighthizer acolyte. He was the chief of staff to the U.S. Trade Representative during the first Trump term. He's now being appointed or nominated to be the next U.S. Trade Representative. It makes me want to ask you about Bob Lighthizer, somebody whose name has been bandied about a lot, but does not yet have an appointment or a nomination in this administration. What do you make of that? And I know he was sort of seen as somebody who might be a commerce secretary. Obviously, Howard Lutnick is the person who got the nod for that job in this next term. Where does he land, and what does it say to you that he hasn't gotten a spot yet?
Well, I think there's a lot of conflicting factors here, and a lot of this is sort of palace intrigue, but Bob Lighthizer was the architect of the Section 301 tariffs against China. He is the one who delivered the Phase 1 trade agreement in February of 2020 that got the U.S. and China to sort of temporarily pause the escalation of the trade war, have China commit to buying $80 billion a year over the next 2 years of additional agricultural purchases. And ultimately, China did not deliver on that. And so one of the big differences, and we're seeing it picked up in reporting right now, is that Lighthizer was going to go by the book and use the enforcement mechanism in the Phase 1 trade agreement, which would have put tariffs on in the late April, May, June time horizon, giving businesses a period of time to pull forward their purchases, get products over from China and get them into the U.S. system in advance of these tariffs going into effect. The fact that Bob Lighthizer is not going to be there, which I guess is where we are right now, I'm still sort of quasi-optimistic that there might be a trade czar role. But the fact that he's not there suggests to me that maybe Trump thinks that between Lutnick and Jamieson Greer and Kevin Hassett, they can sort of disregard that Phase 1 trade agreement enforcement mechanism and go right into tariffs. I think that's probably our main takeaway this morning that I'll be talking about with clients. I don't know why there's an expectation that these tariffs aren't serious, or to the alternative narrative that the market's responding to other factors right now. But in general, I'm concerned, growing increasingly concerned, that we won't have somebody who's by the books like Lighthizer next year. We'll have folks who are much more eager to even get more aggressive than he was in his first term, which would put tariffs on earlier.
Henrietta, just briefly here, what's between now and Inauguration Day? What do we have to look forward to, again, coming out of this Trump administration in waiting?
The most important thing is what's happening in the Senate and House budget committees. We're going to get a big deficit number for their authorization in the reconciliation bill that will tell us how big the tax bill is going to be next year. That number could come out as early as the next couple weeks. The Trump administration is going to do its own thing on executive orders and immigration and tariffs and all that. But the real meat for the investment community is going to come out of the budget committees, which is wonky but true. And we should know that in the next couple of weeks. That deficit number is really all I'm waiting for.
Henrietta, thank you so much for joining us. Always get a little bit smarter when chatting with you. Henrietta Treyz, managing partner at Veda Partners, getting the latest coming out of Washington, D.C. with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. David, Lisa. After insisting he would not pardon his son, Hunter, on tax evasion and gun charges, President Joe Biden announced yesterday that he would indeed do that. President Biden issuing a full and unconditional pardon that the president now says was politically motivated. Biden had long promised he would not interfere with his son's cases, but now Biden says he believes his son was selectively and unfairly prosecuted. National Security Advisor Jake Sullivan says even though he is allegedly on President-elect Trump's so-called deep state members list, he is staying focused on protecting the country and ensuring a smooth transition to the Trump administration.
I have to say that I've been gratified so far by the coordination I've been able to have with the incoming Trump team. They seem focused also on a smooth transition because they want to be able to hit the ground running.
Sullivan spoke on ABC's This Week, heard Sundays on Bloomberg. It is Cyber Monday. Retail analyst Bert Flickinger says while there will be good deals on TVs, many shoppers are waiting out.
Shoppers are outsmarting the stores, especially on consumer electronics and Best Buy. So they know that the prices of TVs will come down even more after New Year's Day and into the first quarter through the Super Bowl and Oscars, the biggest respective buying times for TVs.
Analyst Bert Flickinger says while normally electronics are the number one selling item on Cyber Monday, this year it will likely be clothing. The White House is all decked out for the holidays. There are 83 Christmas trees throughout the White House. They're decked out with over 28,000 ornaments. Over 165,000 lights were used to make the trees along with the garland wreaths. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Bloomberg Surveillance is brought to you by Anshin Accountants and Advisors. Partner-owned since 1923, Anshin factors in your unique circumstances to develop innovative tax and accounting solutions. Visit ANCHIN.com. Anshin, recalculating what's possible. So, is there a go-to gift that's on your list that's been submitted to you this year?
We are at the stage where any athletic apparel, any sports team gear. I was in Brazil. I brought back some Brazil national team jerseys. Smart. Things like that, popular, and also never on sale.
Never on sale.
You can never find any team gear. How about at your house?
My guys are at the age of
no gift cards. I know that.
No, what are you getting from me? And that's kind of where we're. I mean, they are off the dole. It is all about what they can do for me. That's where we are. They're at that age, but we'll see what's happening. I don't know. I'll put out the call and see if there's anything.
Happy holidays.
Yeah, exactly. If there's anything they need or want, but we'll see. But again, it's all about me. S&P off 2, the Dow off 20, the Nasdaq up 9 points. So no direction here on this Monday morning. Yields pretty steady here. The 10-year Treasury 4.19%. WTI crude oil up a little bit here, up about 1%, but still below $69 per barrel. I filled up the Beamer at $2.75 per gallon. Route 35, Wall Township, Jersey Shore. Right. We'll check in with John Tucker and see what it is on Route 36. That's coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have little movement in futures. This after the S&P 500's record close on Friday. So right now we have S&P futures, little change, down about 2 points. Dow futures down 21 points. We have NASDAQ futures up about 8. We have the 2-year yield at 4.18%. That's up 3 basis points. Yield on the 10-year 4.19%, and that's up 2 basis points. The CAC compare is seeing a little bit of a lift. It's now up about 0.2%. That's after being down about 1%. The reason why? Well, the French government had offered this final hour concession to Marine Le Pen on the 2025 budget. We'll head over to currencies. The Bloomberg Dollar Spot Index up about 0.5%. The Japanese yen, euro, British pound or weaker. Bitcoin down more than 2.5% at around 95,000. Shares of Gap, they're up about 3%. It was upgraded to overweight from neutral at JP Morgan. That was following a meeting with the company's CEO and CFO. And finally, yes, as we mentioned it, Moana 2, the biggest Thanksgiving opening in Hollywood history, grossed $221 million North America over the long holiday weekend. But here's the thing, add to that the continued success of Wicked and Gladiator 2. Hollywood studios, theaters registered their biggest Thanksgiving week ever. They sure needed it. Shares of AMC, they're up more than 1.5%. That is a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate it. David Gura sitting in, Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Did Cornell, how did they do this year in football? Because we have the Harvard coach on.
We do regularly, and Harvard, of course, beat Cornell. They did all right. Hockey is their sport. We'll see how they do, and their coach is in his final season. So my fingers are crossed. Usually pretty good. And then football has always been like this. Sometimes they're good, sometimes they're not. It's like Duke used to be.
Yes.
And now Duke is doing fairly well.
Consistently well.
Yeah.
I think they're like 8-4. I think we're going to a bowl.
I mean, that stadium used to be empty, but now you've got students coming out for games.
Well, the problem is only like 10% of the Duke alumni would live within 100 miles of Durham. True. So that's a problem.
Yes.
Kind of
UNC has a new coach. We're going to have a new coach.
Yes, going to have a new
Matt
coach.
Brown.
Kind of kicked
being
your
shown
older
the
coach
exit.
to the curb there.
That's true. For the second time. So
yeah.
Anyway, they do have the local alums there, but I think they've been roundly disappointed with how this season has
But it's
gone.
basketball season, so
it
we
is now
live to
time.
fight
Yes, I
another
can't
day.
wait.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Lisa Mateo, newspapers. What do you got for us?
All right, so did either of you indulge in the Black Friday shopping? Did you go in-store, online, nothing like
No
that?
stores.
Nothing?
Nothing. Absolutely
Black Friday?
nothing.
Steered clear.
Okay, see, I'm the loser. And I woke up at
The
4 in the
traditionalist.
morning.
No, you did not.
And I went to the Jersey Shore outlets.
Wow.
Yes, you did. Look at you.
Which opened at 6, and I got there like 6:45. Parking lot was almost
Already?
full.
No kidding.
Okay.
Wow.
But here's the thing: this new data that's out, it shows that a lot of those bargain-hungry, American shoppers, they didn't do that. They skipped out of the in-store shopping. They went online on Black Friday. This is from MasterCard. Sales brick-and-mortar stores grew just 0.7% year over year. That's according to those preliminary estimates. But e-commerce sales increased by 14.6% online. So you see the difference there. I mean, this Adobe tally also, it showed that Americans spent about $10.8 billion online on Friday. That's 10% more than a year earlier. And then today's Cyber Monday. So
Right. See, I have a problem with this
Yes.
because you're right. Like Black Friday's become an online thing.
Right.
And then we have Cyber Monday as
It
well.
makes
I
no
don't
sense.
understand the utility of the Cyber Monday on the heels
But there
of
are
that,
still people like Lisa Mateo that get up and go to the stores. Now, I have to ask, did you go by yourself or did anybody accompany you?
No, the whole family came.
No
out.
way.
And here's the thing.
Not the soldier dude. He did not get up.
No, he did not
Yes,
get up.
okay,
My
all right.
son was sleeping.
Yes.
But here's the thing. You go and it's like you look online and it's the same exact deal.
Right.
Like the 40% off, you go in the store, you get the 40% online, the same exact time. But you do save on the shipping if you go in store. You just want one thing, so
Okay.
if you get a couple
So did you
more
get stuff?
items, we did, yeah.
Okay.
We
And they
racked
bonded.
up. And
Can't
we
get that
bonded.
off.
Bonded. Oh, yeah,
Yes,
family
yes.
bonding
Oh
time,
my
yeah.
gosh, we were delirious, and the rest of the day was shot. But that's
Exactly.
okay. But more people actually are doing it. But you're right. You're seeing this
All right.
blending from Black Friday,
Yeah.
which started a week before, because people started putting out their sales. So anyway, which brings me to my next story is about the return. Okay, so when people start returning, if you notice, there's a lot of fine print now. Like a lot of the retailers are cracking down on how consumers send their items back. But a lot of shoppers are saying, you know what, we're not going to deal with it. Wall Street Journal, they say shoppers are pushing back. Some have stopped buying from retailers that charge for those returns. It doesn't seem to be affecting much because we just heard those MasterCard figures, right? But the debate is, here's the reason, right? Retailers are saying they need stricter policies because returns and return fraud are starting to eat into their profits.
Interesting.
So that's why they need to do that. But the shoppers are saying, you know what, the sizing is inconsistent, so I have to order 3 sizes to try them on and then return the other 2, afterward.
How hard or easy is it to return stuff, though?
I mean, with Amazon, it's easy. You just kind of do it and you print out the receipt. You take it to the UPS store. You don't even have to package it, and they just send it off for you.
All right.
I mean,
Well, that's
easy.
Amazon. They always
But that's Amazon.
Yep.
But a lot of the stores, let's say like a Saks Fifth Avenue or like a Nordstrom or a Macy's, they're starting to change the way they do it because it's costing them money.
All that.
It's costing them money. And with the fraud, I didn't even realize that the fraud's in returns as
Because
well.
if you're buying online, you're particularly clothes, you're taking a risk there. But people do it.
Right. People do
All
it.
right.
People do it, especially if you, like they said, the sizing. You don't know what size, so you're like, well, I'll just order a small and a medium, and then I'll return whatever doesn't fit.
Okay, good to know. Good to know.
Okay, this next one is an Indian steelmaker planning to launch its own EV brand. So it's JSW. They're telling the Financial Times that they want to manufacture the EVs in India, sell them in India, but it's a growing market. You have EV makers in India like Tata Motors, Mahindra, Ola Electric. So there's a growing market for it. Apparently, this is according to S&P Global Mobility. Electric car sales in India total only about 100,000 units per year. That's about 2% of the passenger car market. But sales, they're starting to take off with more affluent Indian customers. So that's how that change is starting. So they're saying they want to get in on the action. So that's JSW. They're a steelmaker.
Why do you want to get into the auto business? I have no idea.
Well, it's a huge market, right? I mean, that's the...
Yeah, but you're a steel maker.
Yeah.
I mean, I don't know. I think, you look at all these auto companies, I don't know how, and investors don't know how to evaluate this transition from, internal combustion to EV.
Right.
And if you're a General Motors, Ford, Volkswagen investor, I don't think you have a clear view. That's why they're trading where they're trading, because I think the real question globally is, what's the demand for these things?
And how long is that transition going to take, right? I mean, there's a sense it was going to happen really quickly, and we've seen all these European automakers now saying, hold up, we're not going to do it. We're not going to do it cleanly. We're going to keep making these internal combustion engines for a while.
And I'm not going to pay a premium for an EV. So when I was searching for the Beamer, the guy said, I can put you in an EV, but it's a 30% premium. I'm like, that's zero value to me. I could care less about that stuff.
No, thank you.
Is your Vespa electric? No.
No, the Vespa is 50 cc's
okay.
pure,
Right.
raw,
Sorry,
internal combustion
didn't mean to ask.
engine
I shouldn't
power.
have asked. That's right.
Exactly. So anyway, that's it. I was cruising on the Vespa this
I'm
weekend.
sure you were.
All right, what else we got here?
Last one. So LeBron James, famous basketball player,
Yes.
doing great. But his media company actually lost $28 million in 2023. This was in Bloomberg's Screen Time newsletter. Check it out. This is according to Lucas Shaw. They got their hands on some documents that showed that. But it shows Hollywood production companies, they've grown over the past decade to serve the growing demands of streaming services. But now you see, as Paul always talks about, streaming services cutting back on production, looking closely at their budgets. So that's why you're starting to see this change. But apparently he lost out pretty big in 2023. I mean, he's doing quite well for himself. I don't want to put that out there too. But you see film, TV businesses started by celebrities. They're struggling to start to make a profit right now because
I don't know why they just don't do what they used to do. Just go buy a restaurant. If you want to throw your money away.
Or a dealership.
Go buy a restaurant.
Car dealership.
Or car dealership.
Yeah.
I mean, any manager that allows these athletes or film stars to do anything but stocks and bonds, and maybe I'll give you 5% of your money to be stupid with, and go buy a restaurant or go, start a media company where Disney and Warner Brothers Discovery struggle to make money. I just don't get it. But
Love this line from Lucas. Producing good movies and TV shows is hard, and having a celebrity producer does not guarantee success.
Does not.
Good caveat there.
Well, I don't know how much you guys pay attention to this, but in the credits, look at the producers and executive producer. Executive producer is, I'm going to give you this executive producer title.
Yep.
No economics, but you can then say you're a producer.
Gotcha.
All right, that is newspapers from Lisa Mateo. Always a coveted spot in the lineup here today. We're going to have more coming up. Futures mixed. This is Bloomberg Good Morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, good Monday morning, everyone. Coming up in this hour, we're going to check in with Damian Sassower, Chief Emerging Market Strategist for Bloomberg Intelligence. Talk to us about the dollar and emerging market currencies and fixed income. Plus, Ray Ann Mitrione, partner at Kaplan Family Office, on why we may soon see the huge funds in money markets flow into the equity market and the positive outlook for outperformance in the United States. Benoit Ann, lead strategist at Fixed Income Solutions for MFS Investment Management. That's Massachusetts Financial Services up there, 500 Boylston Street in the Back Bay of Boston. That's where they are. On why we now may be facing major macro regime transition in a second Trump administration, how fixed income investments may be the way to go. So a lot coming up in this hour. So we got a lot coming up. Bloomberg Surveillance is brought to you by Cohn Resnick Advisory Assurance Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies and platforms to drive competitive advantage. Let's kick things off with Lisa Mateo and a Bloomberg Business Flash.
You got it. And we have futures. Well, a little mix of red and green on the screen. And this is after showing some signs of a pullback from the S&P 500's record close on Friday. We'll start with S&P futures. Little change, down about 3 points. Dow futures down 31. We have NASDAQ futures up about 9. We have the 2-year yield at 4.19%. That's up 4 basis points. A yield on the 10-year 4.20%. And that's up 3 basis points. I want to point out the CAC and Power seeing a little bit of a lift. This is after being down about 1%. It's now up about 0.3%. And this is after the French government offered that final hour concession to Marine Le Pen on the 2025 budget. We'll head over to Bloomberg Dollar Spot Index, up about 0.5%. We have the euro, British pound stronger. We have Bitcoin down nearly 3% at around 94,000. Looking ahead, we have the monthly jobs report that comes out on Friday. Investors looking for some insight into whether the Fed will cut interest rates again. That's after its 2-day meeting wraps up on December 18th. And shares of Stellantis are lower this morning. ADR is down about 7%. Its CEO, Carlos Tavares, he stepped down earlier than expected after a dispute with its board. Then you have Volkswagen. Those workers across Germany, they've begun temporary walkouts after failed cost-cutting agreement talks with its management. And finally, Tesla and BYD, they're offering further incentives in China. It's to meet those annual sales targets. It includes 0% loans and also cash discounts. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live as well on YouTube. So you head over to youtube.com. That's the internet. Search Bloomberg Podcast, and that's where you'll find us. David, one of the top stories on the Bloomberg all day, and I suspect it will be for the remainder of the day, President Joe Biden signed a sweeping pardon for his son, Hunter Biden, reversing his previous stance that he would not use his executive power to aid his oldest living child. What do you think changed from, again, months and months and months saying he would not do this to then turning around and doing it, but in a very sweeping way as well?
Yeah, he said it repeatedly. The White House press secretary said that he wouldn't do it either as well. I look at the individuals that President-elect Trump has appointed to some of these key roles. Kash Patel, we've talked a little bit about, to head the FBI, and I think there might have been some fear of sort of what the prospects for Joe Biden's son might have been had he been sentenced on December the 12th in Delaware and later in Los Angeles, where he pleaded guilty to a tax charge as well. And, those come with pretty serious penalties, or they could potentially. Often when these charges are brought, judges exercise some discretion. They're not as high as they could have been. But he was looking at 17 years in prison max. And I think that was something that was probably pretty sobering to the President of the United States. And you just mentioned the pardon that we saw. You said sweeping. It was full and unconditional and really covers a huge period of time going back to 2014 through 2021. So it is designed to null those two charges that I mentioned, the tax charge and the gun charge, but also anything else that might come up. And I think there was this fear that Republicans could keep kind of hounding Hunter Biden, kind of surface some other charges against him going forward here. So this is something that really does kind of protect him for a very large period of time, Paul.
And it seems, I guess, from President Joe Biden's perspective, an acknowledgement that his political career in any way, shape, or form is coming to a close, because this really damages, arguably, certain part of his legacy.
Yeah, he's going to get some flack for it, as we've seen already from Republicans who are criticizing him for doing this, and from Jared Polis, the governor of Colorado, who's a Democrat, who said, look, you're the paterfamilias of the United States if you're the president. You're not the father just of your kid. And right. I think Jared Polis, the governor, recognizing the fact that there has to be some sympathy here to what the Biden family has gone through as a result of this, but suggesting that this could set a bad precedent. And, as we heard from Derek Walbank last hour, there has been such an effort among Democrats to criticize the Trump administration for, yes, pardoning some members of his family. Jared Kushner's father, for instance, was pardoned by President Trump during the first term. This is going to kind of change the tenors of that conversation going forward here as a result. But of course, it is within the grounds of what a president is allowed to do. He does have the right to pardon whomever he so chooses. And what's interesting to me here is the timing. This comes here on the heels of a Thanksgiving holiday that the Biden family spent together in Nantucket. President Biden is off to Africa, to Angola, on what will be his last international trip as president. And I mentioned that sentencing date, December the 12th. I think there is a lot of reporting to indicate that President Biden wanted to get this all kind of sewn up here before that sentencing date, before the Christmas holiday as well.
All right, so we'll keep on top of that. Bloomberg's got a lot of excellent reporting on the terminal and Bloomberg.com, so continue to follow that for further reporting. Switching gears here, let's talk about currencies. Let's talk about emerging markets. U.S. President-elect Donald Trump warned the so-called BRICS nations that he would require commitments that they would not move to create a new currency as an alternative to using the U.S. dollar, and repeated threats to levy a 100% tariff. Damian Sassower joins us. He does all the EM stuff for us. Damian, I was not aware that there were countries out there that were thinking of creating a new currency. Can you give us the background here? What's happening?
I wasn't aware of that either, actually. Okay. But look, I think the net takeaway for me here is that this suggests it's just a bad look for the dollar and a bad look for President Trump. I mean, it suggests a lack of confidence in the dollar by the current administration. I mean, you really can't. Don't get me wrong. The U.S. dollar accounts for 88% of the $7.5 trillion a day FX market. 88% of those crosses that are trading are relative to the dollar, and so to displace it as the world's reserve currency, one would think is going to be a far stretch, yet Trump coming out and outwardly kind of expressing his disinterest in seeing some of the emerging markets shifting or pivoting away from the dollar. It's just not a good look, and it suggests that there may be some weakness ahead.
Damien, I was reading Paul Donovan's note this morning from UBS, and what he did was draw this distinction, an important one, between reserve status and exchange rate value. Yeah. And he noted threats to the dollar's reserve status would be domestic, not international, weakening the rule of law, excessive fiscal deficits, or economic nationalism, reducing trade and capital flows would be obvious threats. So this gets to sort of what we're looking at over these next few weeks and months as we get more rhetoric from the president-elect and more detail on these proposals. A lot of them would, in fact, have a very profound effect on the dollar, kind of contra to what he was suggesting in that tweet about a potential BRICS currency.
Well, David, let's just focus on what all of this means for global FX, right? It's the tariff and trade outlook in the U.S. That's where, markets are kind of centered on here. And look, don't get me wrong. I mean, you look at the relationship between spot U.S. dollar and bond yields. I mean, it's already baked into U.S. dollar skews across the FX market. But here's what you got to look at, David. You got to look at currencies that are more manufacturing than services, right? Those should underperform peers in this environment. And then you look at the fiscal versus monetary support structure, right? Currencies that are able to stimulate fiscally as opposed to monetarily should outperform peers as well. I mean, and when I say fiscal intervention, fiscal stimulus, I'm also talking about FX intervention, right?
Yeah.
A lot of countries out there can intervene directly in their FX markets to prop them up. So, I think, as it relates to EM, you've had some central banks that were early on in cutting rates and slashing rates. Those economies might benefit because they were able to kind of inject stimulus before the others. And so, that kind of benefits maybe the Brazilian real, the Chilean peso, and others. But my God, if you look at G10 here, Euro US, I mean, I think if you listen to Audrey Childe-Freeman at BI, she's my chief FX strategist. She's looking for a test of parity, I believe. I think a lot of others like JP Morgan are calling for that in the first quarter of next year. You look at dollar yuan, markets expecting that, BI expecting that to maybe even rise as high to 740, in the not too distant future. So obviously a stronger dollar is well in play.
Bloomberg Dollar Index, BBDXY, for those of you in front of a terminal. You put it up there, you graph it, GP, you go max on this thing. The dollar's up and to the right.
Up 5.6% year to date. Yeah,
There's
and 4.
no talk anywhere of the dollar being replaced as a currency, right?
Right. Well, I mean, I guess there's talk now, but I mean, it's just the reality is you're not seeing it in the price movement, right?
You're not
I
seeing
mean,
the price movement.
The dollar's up 4.7, call it 5% since September alone. I mean, Euro US down 4.8. I mean, it's dollar Mexico's up. The Mexican peso is down 21% versus the dollar this year. The Korean won, another big trade currency in EM, down 9% versus the dollar this year. So you're absolutely right, but it begs the question. Seasonals play a role here in December. If you look at, I think 14 of the last 17 years or something crazy, the dollar has declined in December. So is now the time to be putting on these bullish dollar structures? Perhaps not, is kind of the argument. So maybe you have some people sitting on their hands, but I'm just looking at Ira Jersey's rate forecast into the end of the year. The only thing that can really be a saving grace for EM is if you really kind of see the soft landing narrative kind of roll in on itself, and you see curves flatten off the back of it, weaker growth, weaker inflation, and that would actually be a boon to emerging markets, and there may be some opportunities to receive there, Paul.
Damien, thanks so much. Always appreciate it. Damien Sassower, the pride of Vanderbilt University, Chief EM Credit Strategist for Bloomberg Intelligence. With our news in New York City, here's Michael Barr.
Thank you very much, David, Paul, and Lisa. Thank you again. After insisting for months that he wouldn't, President Biden has reversed course and signed a blanket pardon for his son Hunter nearly 2 weeks before he was due for sentencing on federal gun charges. Bloomberg's Laura Davison reports the move comes ahead of a promised overhaul of the justice system from President-elect Trump.
Trump is looking to install staunch loyalists into these top law enforcement roles. Pam Bondi is someone at his pick for DOJ, or for Attorney General, who has been by his side for years. Kash Patel is very much known as someone who's a loyalist. And so these are the kinds of things that Biden is thinking about. The decisions and what he was thinking about while he was still running versus now, it's a very different set of political calculations for him.
Bloomberg's Laura Davison in Washington. The Israeli military says that an Israeli-American soldier who was believed to have been captured alive by Hamas in its October 7, 2023 attack was killed that day and his body taken into the Gaza Strip. Omer Nutra, just shy of his 24th birthday, was doing military service in Israel when Hamas invaded. Stressed out? You're not alone. The holidays can put a strain on your mental health and relationships. Some who have lost loved ones could feel the loss around this time of the year of gathering and giving. And the weather, with shorter days, can lead to seasonal affective disorder. Psychiatrist Ajua Monte has some tips on how to beat the blues.
Some ways that you can combat that is by going outside, getting more sunlight during the few hours of daylight that we have. You can also do light therapy. You might also have to consider doing antidepressants for just a brief period of time, and that's something that you can talk to your doctor about.
Dr. Smalls Mante spoke to ABC. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, the business of sports. You walk down Main Street, Detroit. Are the fans there? How are they feeling at being 11-1?
Well, two
wow.
things about that. First of all, if we would be talking about Minnesota if it weren't for our good old Detroit fans out there, because we just can't believe it. And then second, the Thanksgiving game, if you're a Lions fan, best 32 seconds in the end of the game that you've ever spent in your life.
Exactly. I mean, 11-1. You just don't. Even in my lifetime, I can't remember when Detroit.
It's never happened.
Been as good. And it's good news for our friends out there in Detroit. They deserve it. The team looks really, really
great game
good.
on Thanksgiving.
And football in New York is just
in
New York City. I'm not going
to.
Yeah, we have none. Upstate New York, Kathy Hope, she's got her bills, but we got nothing here in the city. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures. This is after stocks finished off the holiday shortened week with another record on Friday. The S&P 500 notched its best month in a year, posting its 53rd all-time high of 2024. The NASDAQ 100, well, it had its strongest monthly gain since June. NASDAQ futures up about 0.1%, 30 points. We have Dow futures, little change, down 31. S&P futures are down just a fraction. We have the two-year yield, 4.19%. That's up 4 basis points. The yield on the 10-year, 4.21%, and that's up 3 basis points. To commodities, we have Brent crude up more than 1% at $72 a barrel. WTI crude, $68 a barrel. We have spot gold lower at $2,642 an ounce. The Bloomberg Dollar Spot Index up about 0.5%. We have the Japanese yen, euro, British pound weaker. We have Bitcoin down about 2% at around 95,000. Some news in the semiconductor space. The Biden administration unveiled new restrictions on China's access to vital components for chips and AI. Now, it also blacklisted 140 more Chinese entities. We have shares on NVIDIA. They were down about 0.5%. Now they're down about 0.1%. Meanwhile, NVIDIA, well, they've joined a slate of investors. They've raised more than $700 million in Nebius Group. That's a technology company that rebranded from Russian internet giant Yandex. And finally, Amazon founder Jeff Bezos joined Samsung, investing $700 million in an AI chip startup with hopes of taking on NVIDIA. Tenstorin, it's valued at $2.6 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene today. I am Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. All right, so if you're an equity investor, S&P has annualized at over 13% over the last 10 years, over 15% over the last 5 years. But before you hurt yourself, patting yourself on the back, we've had like no interest rates basically during that period of time.
Yes.
What do we do now that we've got the 10-year at 4.2%? What are equity investors, what can they expect going forward? Let's talk to somebody who thinks about these things. Rayanne Mitrione, partner at Kaplan Family Office. So Rayanne, when you talk to your clients these days and you say, all right, I guess we're in a new interest rate environment, maybe a more normalized interest rate environment, what kind of equity returns do you kind of discuss with your clients these days?
It's a good question, right? I mean, you put up those figures of what the S&P has done over the last 5 and 10 years, and it's incredible. And especially the last 2 years, 2023 up 26%. This year we're up 28% so far. We would not expect to see those same kind of prints going forward. I mean, the market has great momentum where there are a lot of reasons why we still expect that we're going to see good returns in the next 12 months. We have a strong economy. The labor market remains healthy. Interest rates are coming down some, and now we're in an environment where we'll probably see deregulation and potentially some corporate tax cuts. And all of that would be supportive of continued strong earnings and momentum that could continue in the stock market. But we would not expect the S&P probably to put up returns over the next 5 years as what we've seen in the last 5 years.
How many sort of sector-specific stories continue into 2025 as you look ahead to the new year? And there has been such fervor, of course, about AI, generative AI over the last year and the year before that. How does it evolve or change going into 2025? And sort of what other sectors are you looking at going into the new year?
Yeah, AI is a theme that we expect will persist. This is, we're kind of at the early innings of this innovation cycle, and we do think that that can continue. We want to maintain our tech exposure, even though there have been such strong returns in that area. We are still kind of maintaining a neutral stance between our growth and value allocations. And then we've been seeing the market kind of broaden out. So kind of the momentum from the soft landing trade is kind of continuing with the Trump trade, and we're seeing broadening out where some of the more cyclical sectors, financials, industrials, discretionary, we're seeing some of that pick up as well. And we're also seeing strong potential and returns recently in small cap. And that's the place where we view as most attractive going into next year. I mean, we just saw the first high in the Russell 2000 since 2021, was up almost 11% in November. But still, valuations are still pretty reasonable and much more reasonable than when you look at large cap. And with the market environment and potential for deregulation and, again, corporate tax cuts, that will all be a tailwind for small cap going forward.
Rayanne, the U.S. now represents more than 70% of the global equity market. Are there opportunities outside of the U.S., or are you guys focusing mostly in domestic U.S.?
We do build diversified portfolios for our clients, so we do have exposure outside the U.S., but we continue to be overweight U.S. within our equity allocations. And, if you look the last 10 years, the S&P has annualized at over 13%, and the MSCI EAFE only around 5%. So there's been a big differential there. And a lot of that is due to the composition of the indexes. So you look at the S&P, you have more than 30% in technology companies, and you look at the EAFE, and that's less than 10%. So there's been a really big difference. And you look at those big mega cap tech companies, most of them are based in the US, and that has really helped to drive returns. But still, like looking at where we are here in the United States with our economy and the stability and what we're seeing over the next 12 months, we continue to view the US as the most attractive place within equities.
I imagine you have some clients who are still reticent to put their money to work in the market. We see the figure of 6.6 trillion, 7 trillion on the sidelines here, people still keeping that in cash. What do you say to them about opportunity going forward and the need to do that? What's the case that you make to them?
We're always proponents of staying pretty fully invested, maybe keeping some cash on the sideline if you know about an upcoming cash need or a tax liability or something that's coming up, make sure that you have that available. But outside of that, I mean, it's hard to argue with the environment we're in and the growth we've seen. Everyone now seems to be past thinking about recession in the near term. And so the market, right now you can still earn 4.5% in a money market. So there's nothing wrong with having some cash available. But our view is there's a lot of opportunity in the market. There are places to invest like small cap that have not done as well as other parts of the market. So you're not necessarily, even though we're seeing highs, you can still buy in and there are still attractive places to be invested.
Rayanne, how about fixed income here? I can sit in a 2-year treasury at 4.2% and sleep really well at night. Can I do that, or should I take some credit risk?
So we do have allocations to fixed income within our portfolios, and credit spreads are pretty tight right now. A lot of our investors are taxable investors, so we do a lot of investing in municipal bonds as well. Nice. And we do have some exposure within treasuries. And we do have some below investment grade, but right now where credit spreads are, we prefer to take that kind of risk either in our equity portfolios or private equity or private credit opportunities that may have a little bit of a better enhanced return.
I just want to ask you lastly about the uncertainty. The theme of the show is uncertainty, but the uncertainty of the macro landscape going forward here, and I imagine that's giving some of your clients pause as well, just wondering sort of which of these eventualities is going to play out, what policies are going to be in place. What is your counsel about how to approach that, just not knowing what is going to change or not in the next administration?
Yeah, you hear a lot on the campaign trail, and we're hearing a lot now about what may or may not happen. There's a lot of talk about tariffs and whether or not that's a negotiating tactic or whether it will play out, and if it does, what effect that could have, as well as, the deregulation and the taxes. And so you have to take the information you have available and make the best decisions you can with it. I mean, we were looking at a potential reversal in the tax cuts. Now that's not going to happen. So, at worst, we'll probably stay consistent. Maybe we get a little bit of a benefit there. And the tariffs, it's hard to say how that will play out. It probably will not be as significant as what's being talked about now. I do think there's some of that that's used as negotiation. And then, so you just have to take it all, be diversified, plan for a long-term strategic allocation, and make bets on the margin.
All right, Rayanne, thank you so much for joining us. Always appreciate getting a few minutes of your time. Rayanne Mitrione, partner at Kaplan Family Office. Again, as Tom Keene likes to phrase it, the courage to be in the market.
Yes. So,
we are all in there. S&P 500, zip, nothing happening there today. The Dow off 10 points, the NASDAQ up 31 points. So everybody's taking a cautious view here in the futures here, looking at these markets. 10-year Treasury, 4.21%. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Futures pretty much treading water. Traders looking ahead to U.S. labor market data later this week. Now, ahead of that, we have a read on manufacturing, construction spending today. We have car sales figures tomorrow, factory durable goods orders on Wednesday, and initial jobless claims Thursday. Right now, NASDAQ futures up 0.1%, 28 points. Dow futures down 8 points. S&P futures up just a fraction. The 2-year yield 4.21%. That's up 5 basis points. The yield on the 10-year 4.22%, and that's up 5 basis points. French markets seeing a rebound. This is after the Prime Minister's government said it will concede on some of the far-right party's demands over the 2025 budget. The CAC in Paris, it was down about 1%. Right now, it's up about 0.3%. That news also dragging down the euro. We have the euro down about 0.6% at 105.09 against the dollar. The Bloomberg Dollar Spot Index up about 0.5%. Over to Bitcoin, we have it down 2% at around 95,000. Some companies making news. That's De Beers. It cut its diamond prices by more than 10%. That was across the board. It comes as the diamond industry has really been struck by one of the deepest, longest slumps in decades. And some deal-making news. Sources say BlackRock nearing a deal to buy HPS. And that deal, well, it may come this week. It could value the private credit manager at $12 billion or more. That is your Bloomberg Business Flash. Paul and David.
Hi, Lisa Mateo. Thank you so much. We appreciate it. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Economic indicators today are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentives, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Fixed income, you know them, you love them. You can sit at a 2-year treasury at 4.2%. I don't know why you need to be a rock star and take credit risk, but a lot of folks are doing that. The best performance in fixed income this year was U.S. corporate high yield and U.S. leveraged loans, north of 8% total return. So some real returns out there for the fixed income folks. Benoit Ann joins us, lead strategist, fixed income solutions for MFS Investment Management. They were one of my big clients back in the day.
A Boston destination.
500 Boyle Street. You just hang out in the Starbucks across the street, wait for your appointment, and go in and knock them dead and get that big, heavy II vote, which I got every year. Benoit, thanks so much for joining us. What do we do in fixed income here? Again, I feel like I'd be totally respectable. I could show my head in any cocktail party by saying I own my 2-year treasury at 4.21%. Do I do that or do I take credit risk? How do you guys think about that?
Well, I would say let's have some credit here, risk here, because the macro picture is very favorable. Why not enhance your yield a little bit? It's not as if the spreads are going to correct much higher. Recession risk has been priced out, so it's all good for credit as well. I would say near term, the duration picture is a bit more challenging, and that's basically the impact of the U.S. election that has changed things a little bit.
So you talk about that level of enhancement. What do you like in particular? What are you looking at? What are you counseling folks to take a look at?
Well, you mentioned U.S. high yield. I think U.S. high yield is very well positioned. If you look at default rates, nothing going on there, move on. And those smaller corporates in the U.S., they are probably going to get a lot of tailwind from the new administration. And that's going to benefit high yield as well. So if you look at the valuation, if you look at the total yield valuation, the break-evens, they look very compelling. So I really like U.S. high yield at this point.
David, the MFS offices in London, literally across the street from St. Paul's Cathedral. I mean, unbelievable.
In the neighborhood, in our neighborhood there.
In our neighborhood of the Bloomberg Queen Victoria Street. Benoit, are there sectors within the corporate credit market, industry sectors that screen well for you guys?
Well, it depends. The way we do it is there are sectors that look better, but within sectors, there's still some differentiation and stories, idiosyncratic stories from one company to another, especially in high yield, where it's essentially a pick the right name kind of game. But higher rates overall is probably going to benefit financials. Now, financials were a bit crowded, so you've got to watch for that. But longer term, the exposure to the financial sector does make sense in the context of this higher for longer market theme.
I like your phrase here, higher for longer, and I'm curious sort of how you dovetail that with fixed income and sort of what we're likely to hear from Fed Chair Jay Powell this week, and looking ahead to the next few days when he concludes that meeting with his fellow policymakers at the Federal Reserve in Washington. Talk a bit about sort of what you're listening for as we hear from the Fed chairman.
Well, we still need to hear some comfort that they are on the track to continue easing. We want to see a rate cut this month. We want to see more rate cuts next year. If the communication were to change, that would definitely create some turbulence here. So a bit of reassurance. There's been some communication risks recently around the Fed. It's not easy to change gear when you drive fast. So you've got to be careful here, and let's see what happens at the next FOMC. But I'm looking for signs that they stay steady, I guess.
So, Benoit, we've had a ton of investment-grade new issuance, really kind of in the back half of this year. If I'm at Goldman Sachs, Morgan Stanley, or JP Morgan, and I've got a big corporate bond, do I call you guys in London? Are you guys looking to buy this stuff?
So the technicals are very strong. There's a ton of issuance, but it's usually very well absorbed by investors. So there's actually nothing to worry about here from that perspective. Same in the European market, by the way, Euro credit, which is also an asset class we look at closely and which particularly like, the technicals are so strong, the flows are very good, and all the news issues are being snapped up pretty aggressively. So this is testament to the positive macro backdrop we observe across the globe. Definitely a very positive environment for fixed income and credit.
Benoit, we've talked a lot about sort of how the landscape has changed here since the U.S. presidential election. And let me, if I may, indulge you in asking a bit about what we've seen happening in France and Europe more broadly. So you talk about sort of the fundamentals when it comes to European credit looking strong, the attractive valuations there. Politically, help us get a sense of the lay of the land there and how much we're seeing that landscape being adjusted and how much that's sort of weighing on you, the uncertainty about Europe's political future.
Yeah, well, as a former IMF economist, one thing for sure in my mind is fiscal credibility matters. And we hear a lot of noise around budget deficits and debt sustainability issues these days. And it looks like France is going through one of those difficult times. But the other side of the coin, mind you, is it does create a positive environment for fixed income again, because think about what the ECB is going to do. The ECB is the ultimate, not lender of last resort, but at least financial stability watcher in the Eurozone. And that actually is an argument in favor of further ECB easing. So I would not want to be exposed to the French sovereign at this point in time. I think there's trouble ahead still, and that government looks shaky, I guess, even though we just heard maybe today that they're trying to do a last-minute negotiation. But beyond the sovereign in the Eurozone, the environment for European credit remains favorable. We have an easing central bank, we have no recession risks, but we have the growth picture, which is shaking off for the ECB to keep on easing, and that's generally positive for fixed income.
Benoit, it's been almost a month since we Americans elected ourselves a new president. We've now got a pretty solid Republican Congress as well. Has that changed the way you look at the fixed income markets globally or even in the U.S.?
Yes, it's been a big deal. Prior to the election, I would argue we were in Goldilocks, which is the best case scenario. Everything was rallying at the same time. Risky assets, as we all know, the equity markets have been on fire, but also fixed income, including duration, was very positive. Remember September? It seems like a long time ago, but there were 220 basis points of cuts priced in for the Fed.
Right.
Where are we now? Probably 60, 65?
Yeah.
So the duration core has been quite challenged by the U.S. election.
All right. Benoit, thank you so much for joining us. Appreciate getting a few minutes of your time. Benoit and lead strategist, fixed income solutions for MFS Investment Services. Some news, David, crossing the tape. I think it's pretty important here for the U.S. tech space. Intel announces the retirement of CEO Pat Gelsinger, named David Zinsser and Michelle Johnston Holthoffs as interim co-CEO while board conducts a search for new CEO. Frank Yeary, independent chair of the board, will become interim executive chair during a period of transition. Full disclosure, I worked with Frank Yeary back at Salomon Brothers. Mandeep Singh joins us here. He covers all the technology space for Bloomberg Intelligence. He's here in our studio. Was this expected, Mandeep? It seems surprising to me, news, and the stock is trading up about 5% pre-market.
I mean, look, Pat was there about 4 years at the helm, running this company, and obviously the turnaround didn't happen. And in this case, I think the strategy that he laid out just wasn't convincing enough for investors to believe that Intel as an entity would turn around. Everyone was talking about either, them selling parts of the business to Qualcomm or divesting the foundry business. So clearly the strategy that Pat laid out wasn't going to turn around the company, and that's why I think he's going.
You look at this release and kind of study the tea leaves here as well. And so how much of that strategy stays as these two executives take over on an interim basis and the search is mounted to find a permanent successor? How much of the Gelsinger strategy remains while all that's unfolding?
Well, so I think where he got that wrong was in terms of pivoting too much on the foundry side. Remember, Intel tried to acquire this company called Power Semis. That didn't go through because of regulatory hurdles. But if you have to turn around a company like Intel, and turnarounds are very tough in tech. I mean, Microsoft is the most notable one that has actually successfully turned around. But with Intel, like doing both chip design and competing with NVIDIA on the design side and then competing with TSMC on the foundry side was a lot to take on. And I think that's where probably any new guy coming would pick either side, either the design side or the foundry side. And that would be my guess, probably an external candidate. I don't think anyone internally would be able to do it. But
so, I mean, when people always argue about, oh, let's fire this coach or fire this general manager, I'm like, okay, that's the easy part.
Yeah.
But who are you going to hire that's better? Is there somebody out there that the street wants for Intel?
I think you got to get either a guy from NVIDIA, his left or right lieutenant, or somebody from TSMC.
Yes.
Because those are the two main pockets that Intel competes in. So, but pick a side, either the foundry side or the design side. If it's the design, get somebody from NVIDIA. If it's the foundry side, get somebody from TSMC.
And who makes that decision? Is it Paul's former colleague? Who's going to make that call? Which side they go to?
Well, I mean, the board, I think, has a duty here to at least make a decision on how they want to pivot the company. And then the strategic options. I think they left it for too late to figure out, are they going to divest some asset or M&A? And now the company's bleeding cash every year. Yeah. You just got to figure out. And they had 3 rounds of job cuts to make it worse. So these are the type of things. When you decide, you stick to that plan. If you're going to cut jobs, cut deep. Why do 3 rounds?
Mandeep, good stuff. Thank you for coming in last minute. Mandeep Singh covers all the technology. Again, the news. Intel announces retirement of CEO Pat Gelsinger.
You're going to text Frank Urie?
Reporting on that. I will reach out. I've already reached out to my other Solomon buddies, and we're on top of this. Don't worry about it. Bloomberg Surveillance is brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. What I will tell you about Frank Urie, one of the smarter dudes I've worked with over 30 years on Wall Street. I can tell you that right now. He is a very trusted M&A advisor for a lot of CEOs out there. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have a little bit of a pause in the rally that just produced the S&P 500's strongest month of the year. Right now, we have S&P futures, little change down 2 points. Dow futures down 15. We have NASDAQ futures up about 15. We head to the 2-year yield, 4.22%. That's up 6 basis points. The yield on the 10-year, 4.23%, and that's up about 5 basis points. Over to commodities, we have Brent crude up more than 1% at $72 a barrel. WTI crude $68 a barrel. We have spot gold higher at $2,645 an ounce. The Bloomberg Dollar Spot Index up about 0.6%. The euro British pound is weaker. We have Bitcoin down about 2%, around 95,000. Shares of Intel up 4%. You heard it. Just announced CEO Pat Gelsinger retired from the company, stepped down from its board after more than 40-year career. 2 senior leaders, they will share the duties in the meantime while the board of directors searches for a new leader. And shares of Gap up 4%. It was upgraded downgraded to overweight from neutral over at JP Morgan following a meeting with that company's CEO and CFO. That is your Bloomberg Business Flash. Paul and David.
Hi, Lisa Mateo. Thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Bloomberg Surveillance today is brought to you by Anshin Accountants and Advisors, partner-owned since 1923. Anshin factors in your unique circumstances to develop innovative tax and accounting solutions. Visit anchin.com. Anshin, recalculating what's possible. Apparently, influencers on the internet have important impacts on what people buy. I didn't really know that until recently. So that's a thing out there, as opposed to a 30-second ad on television or a billboard by the side of the road or an ad in your magazine. That's not how it's done anymore.
The future is here.
The future is here. So that goes to the issue of what's quality information out there in the world on the web, and what is disinformation? Our next guest thinks about this stuff. Lisa Kaplan, CEO of Alethea, and she joins us here in our Bloomberg Interactive Broker Studio. Talk to us about Alethea. What do you guys do? Who are your clients? What's the work that you guys do?
Thanks so much for having me. I'm Lisa Kaplan, founder and CEO of Alethea. We are a technology company that detects and mitigates instances of online risk stemming from everything from misinformation and disinformation. So think foreign state adversaries, to also looking at where are there risks of things like boycotts, short seller attacks, other risks that can be developed online that pose serious business continuity challenges. We predominantly work with the Fortune 1000 to be able to help them understand how is it that they are being talked about, where are these risks emerging, and what is it they can actually do to get out in front of these different types of challenges.
Talk a bit more about the kind of disinformation that we're seeing. We talk about it a lot in the context of the news and journalism, sort of what people are exposed to when it comes to current events. So here in this kind of corporate setting or with retail, who's perpetrating it? What does it look like? How widespread an issue is this for some of the companies with whom you work?
When we talk about mis and disinformation, what we're really talking about is the ability to weaponize information online. And that's always something that's conducted by an individual or a group of individuals in order to achieve their goal. Oftentimes, we'll see things, especially in the retail sector, things like calls for boycotts. Obviously, December is a big month for retail. People need to do well ahead of the holidays. And one of the things that we're seeing that's actually an interesting development, and it actually, I would say, started really in 2015, 2016, but it's changed how it forms, is the idea of boycotting certain companies because of perceived political donations. We are starting to observe, and we saw this again in 2016 after President Trump was elected, individuals and activists calling to boycott or divest certain companies based on whether or not they made donations in support of one political candidate or another. We're seeing that again today, and we're seeing both influencers on the left and the right call for boycotts based on political donations. We are seeing what I would call manipulative attacks as well, which are when different accounts or different actors are seeking to essentially game curation algorithms, trying to make it seem as though their perspective is quote unquote newsier because it looks like more people are talking about these different trends or these different companies or calling for boycott, when in reality it may just be a very small group of very vocal individuals versus actual customers of these companies.
We've seen some pretty significant companies kind of walk away just in the last several months of their DEI, diversity, equity, and inclusion initiatives. Maybe they just started even in the last 2 or 3 years. I'm surprised that companies take political stands one way or the other. As Michael Jordan famously said back in the day, Republicans buy sneakers too. Why do companies even bother doing that stuff in the first place?
So a lot of DEI programs really started in earnest as a recruiting and a retention tool. The ability to be able to make sure that you're getting the best possible talent. You have a diverse customer base. You want to have an employee and a team that actually reflects that diversity. What we're seeing now is certain activists calling into question whether or not that actually benefits the shareholder. And so what we've observed is that there's a small group of activists who are creating a lot of content and a lot of pressure on companies to essentially get rid of their DEI programs. What we've observed is oftentimes these attacks, while they start online, what will end up happening is your executives will actually get outreach from these individuals before they publicly go after you. We always recommend that organizations seek to understand first, where are your customers, your employees, and your shareholders at on this issue? It can feel really overwhelming and really alarming when you get this type of outreach, but having that data to understand what are the equities that you're trying to preserve as a private company, both in terms of making sure that your team wants to continue to work at your organization. If this is something that they care about, you should have that in mind and be prepared from an internal communications perspective. Second, where are your customers on this issue? We have seen DEI be used to target companies on everything ranging from Pride back in 2019, 2020 to today. And we also are seeing, for example, shareholders call into question whether or not DEI programs are effective. Companies that have data and data ready to share are often the best positioned to deal with these types of risks and navigate through the new media ecosystem.
I would like to ask you just about whose job it is to police disinformation in the corporate side of things. And I've been reading this book about Twitter's recent history by Ryan Mack and Kate Conger, and something they resurfaced was that moment back in 2022, I think, when somebody created a fake Eli Lilly account on Twitter, now X, and said insulin was going to be free, and we saw all of that. All the insanity that followed that.
A bad day for the CFO.
Bad day for, right, yeah. But you had Twitter like really doing very little to stop that from happening. And so I guess what I'm curious about is sort of like how this is policed and how it's policed in a world where there aren't really, on a lot of these sites, the mechanisms in place to kind of sort through what's legitimate and what's not.
So our philosophy and why we exist as a company is because as a democracy, we're not comfortable with the idea that governments would police social media data, what people are saying online that's protected speech. We also understand that for social media platforms, to your point, this is a cost center. And so the necessary resource investment to protect the Fortune 1000 isn't going to be happening from internal cost centers at these platforms. That's just not their model. That means that the cost is actually on these private companies to be able to identify these risks and get out in front of them prior to them becoming a level 10 crisis. A couple examples of this is when we see not just that Eli Lilly example, which I think is a great example of what can happen when an individual pulls a stunt off, basically. It comes and goes in about 24 hours, and the biggest driver is actually the news cycle talking about it. What we look for is more, where is that slow drip narrative that comes data point by data point that causes people to believe something or maybe take an action or have a perception that may not be true. It's a lot easier for companies to get out in front of that if they can catch the narrative when it first starts versus wait for it to be trending on one of these mainstream platforms.
I mean, I can't imagine. It's just with the speed of social media and the velocity that these things take off. I don't know. I mean, you could, if you're a board member, I don't know how you sleep at night thinking about some of these risks there. Lisa Kaplan, thank you so much for joining us. Lisa Kaplan, she's the CEO of Alethea, talking about disinformation and how it impacts many parts of our lives, and including the economics of a lot of companies out there as well. Looking at the market here, 35 minutes before the opening, aptly unched on S&P, nothing happening out there. Dow's off 25 points, and NASDAQ's up 26. So the market has no idea what's going on out there. The 10-year Treasury, it were 4.22%, up about 5 basis points here. WTI crude oil, it's up 1.4%, still below $69 per barrel. Gold actually pulling back a little bit, $26.70 per ounce. WTI and Bitcoin, I got to call that out. Tom Keene's not here. We'll do it. Minus 2%.
When the cat's away.
96,000 for Bitcoin. Here's Hootie. That's coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Marianne Bartel. She's a CIO at Sanctuary Wealth. Get her thoughts on these markets. She's got a 7,200 price target on the S&P 500. How about that? We'll see how she got to that number. Kim Billeter, Global People Consulting Leader at EY Parthenon, talked to her about Gen AI, what it means for the workforce. Melissa DiDonato, CEO at Kyriba, discusses how C-suite executives are preparing for President-elect Trump's proposed tariffs. We got a lot coming up here. Balchunas, he's scheduled to be here at 9:45, but that's
train
just
trouble. How's the train?
It all depends on the Acela train. I haven't checked on the Acela train. If the Acela's running, he'll be here. If not, we'll have to just figure something out here. All right, let's kick this whole thing off with Lisa Mateo.
You got it. And we have futures showing signs of a pullback from the S&P 500's record close on Friday. We have S&P futures right now. They're little changed, up about a point. Dow futures, little changed, down about 18 points. NASDAQ futures, up about 0.1% or 38 points. We have the 2-year yield at 4.22%. That's up 6 basis points. The yield on the 10-year, 4.22%, and that's up about 5 basis points. The CAC and Paris seeing a little bit of a lift, and this is after being down about 1%. The French government offered a final hour concession to Marine Le Pen on the 2025 budget. Right now, the CAC and Paris up about 0.1%. The French budget drama also dragging on the euro. It's down about 0.6% at 105.11 against a dollar. We have the Bloomberg Dollar Spot Index up about 0.5%. Over to Bitcoin, down about 2% at around 95,000. Now, looking ahead, the monthly jobs report that comes out on Friday. Investors are going to be looking for some insight into whether the Fed will cut interest rates again. That's after its 2-day meeting wraps up on December 18th. Shares of Intel, they're up more than 3%. It announced that its CEO, Pat Gelsinger, has retired from the company, stepped down from its board. And Stellantis also seeing a change in its leadership. Its CEO, Carlos Tavares, he stepped down earlier than expected after a dispute with its board. Those ADRs down about 6%. And finally, Volkswagen workers across Germany have begun temporary walkouts after failed cost-cutting agreement talks with its management. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura standing in for Tom Keene here as we speak
Following
on
your
Paul
lead.
Sweeney. Yeah, absolutely. Why not?
The blood flowing.
Exactly. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Bloomberg Surveillance today. It is brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global marketplace products across all asset classes. CME Group, where risk meets opportunity. Let's look at this market here. S&P 500 is up 25, 26, 27%. I mean, just ripped this year. The last few months have been particularly strong. The question is, where do you go from here? Enough earnings growth out there to support this market? Our next guest thinks so. Marianne Bartel, she's the CIO of Sanctuary Wealth. She joins us here via the Zoom thing. Marianne, for 2025, you expect the S&P 500 to continue its gains with a target range of 7,200 to 7,400. What gets you to that level, Marianne?
Well, we think earnings are going to power higher. You know, I think people are underestimating what AI can do, and we don't even talk enough about blockchain. This is going to be transformative. And we've related this to 1995 to 1999, where we saw markets really soar during that time period. Now, we do get pullbacks from time to time, but we think the earnings power is going to be significant. In addition, the consumer is still very strong. You know, the data that's coming out for the holiday season is very bullish. We think the consumer stays strong. And then you have elected President Trump with policies that are expected to really be business friendly. And when we combine all of that, that's how we get to our target of 7,200 to 7,400.
You say you draw that parallel back to 1995 to 2000. What are the similarities that you see there in specific, and sort of what lessons could we or should we draw from how that ended, and how applicable is that to what we're seeing today?
So, yes, I think at some point in time, but not next year, markets can go parabolic. I think we're in the early stages of that. Markets didn't peak until March of 2000, but markets went up 20% 5 years in a row with some corrections in between during that whole time frame. So what got us there were computers and the internet. And we saw productivity enhance. We think the big driver here will be productivity through AI. And we also think we'll get productivity gains as we start seeing blockchain advance and something that's called Web3, which is the next generation of the internet. And we think this plays out into the end of the decade. So we don't think this is just a 2025 story. We think this is the sweet spot and that markets will really be powered much higher because of these new technologies.
So, your price target here implies, 20% plus kind of return over the next 12 months. But we've had the last couple of years north of 20% returns. And we know over the last 10 years, the S&P kind of has grown about 13%, again, above trend line again. When does this market take a break, do you think?
Well, I think you can get pauses from time to time, but I think the earnings power is there. But more importantly, clients aren't all in. We still have substantial cash on the sidelines. It's almost $7 trillion. The other thing is when markets peak, they peak when people are all invested, particularly the retail investor, and the market is highly leveraged. And we look at New York Stock Exchange margin debt to determine that. And we're not even close. So we don't think everybody's all in. We don't have a lot of leverage. So we don't even think we're near an all-time high for the markets. So for clients that can, maybe dollar cost average in over a period of time, we think the gains not only in 2025 will be substantial, but also as we go out into the end of the decade.
You write about there being this money mountain, the $6.6 trillion mountain, and trying to reach the peak of that, getting people to put that money into the market. What do you say to those who look at, yes, the business friendliness or perceived business friendliness of this next administration, but worry about the economic landscape going forward here and worry about the prospects of inflation being sticky or perhaps picking up if some of these policies go into place? How much of that is a deterrent to investors who might put some of that money to work?
I think a lot of it and a lot of the geopolitics are a deterrent. But what I can tell you is I've been on the market for 40 years. Every single year, there's been a reason not to invest. And markets have really done substantially well. What we tell clients, what powers markets higher are earnings, not geopolitics. Yes, administrations can have impact depending on their pieces of legislation. But we're also in an environment where the Federal Reserve is easing. It's no longer tightening. It wants to get, to neutral. We think that's another positive for markets to go higher. So I think clients need to move beyond that and really look at, can companies really produce earnings to power the market higher? And as we laid out the landscape in our year ahead, we still think companies can produce earnings, grow their profit margins. So we're pretty excited about entering 2025.
How about in the fixed income space, Marianne? I can sit in a 2-year treasury and get 4.22% and sleep well at night. Do I do that or do I take some credit risk out there?
So I think you can take select credit risk, especially with the Fed lowering rates. We expect the market to continue to grow. And you normally don't get a lot of defaults or bankruptcies when you're not in a recession. And we're not forecasting a recession. So we think if you're in the middle part of the curve, you can actually do fairly well. But we do think equities will outperform fixed income, but fixed income tends to be that ballast to try to reduce the volatility in a portfolio.
Marianne, what are you listening for when you hear the Fed chair speak this week? As you look ahead to that next Fed meeting, I was talking a few minutes ago just about the perceived stickiness of inflation, the degree to which that's kind of flummoxing this Federal Reserve. What are you hoping to hear from the Fed chair when he speaks next?
I think what everybody's looking for is what's going to be the pace that the Fed is looking to get to the neutral rate. What is the rate cut cycle going to look like? And I mean, for the past 2 years, the market would price in all these aggressive rate cuts, and then the market would have to dial it back. And then we would do it all over again. So we might be in kind of that ebb and flow of how many rate cuts are they going to do and exactly when they're going to do them. But I'm not focused on that as much as I'm focused on that the Fed has stopped tightening and that they're in the process of trying to get to neutral, or it is a form of easing. Easing, we think, in this environment where the economy is growing and where we're at full employment, will really booster the economy. So again, we have a pretty optimistic outlook for 2025.
Marianne, thank you so much for joining us. Always appreciate checking in with you. Marianne Bartels, CIO of Sanctuary Wealth, down there in Miami, Florida. How about that? With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. After insisting for months that he would not, President Biden has reversed course and signed a blanket pardon for his son, Hunter. Bloomberg's Laura Davison reports it's a sweeping clemency that covers not just past crimes, but any further legal challenges that may await.
Some former DOJ lawyers who have worked on pardons have said there has been no pardon, sort of as wide ranging as this since since Nixon. So this is a very, unusual situation. Even Trump, when he had several people he pardoned while president, those were for specific crimes, specific acts. This is a sort of a blanket pardon going forward.
Bloomberg's Laura Davison in Washington. President Biden is now in Angola for his first and only trip to the sub-Saharan Africa before he leaves office next month. President-elect Donald Trump's nominee to run the Department of Defense, Fox News host Pete Hegseth, was forced to resign from 2 veterans advocacy groups amid allegations of personal and financial misconduct. The New Yorker reports the allegations against him include being repeatedly intoxicated on the job, pursuing sexual relationships with female staff, and ignoring accusations of misconduct. A dispute over flavored vaping products goes before the U.S. Supreme Court today. The issue is an attempt by the Food and Drug Administration to stop e-cigarette companies from selling candy and fruit-flavored vape products because the young people attracted to them become addicted to nicotine. A lower court ruled the FDA did not follow proper legal procedures when it denied applications of companies to sell their nicotine-containing products. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. I'm looking at the euro, David, weaker yet again today. Tom Keene may get his parody as he's sitting in his cafe somewhere in Paris or in Rome. But in France, they got an issue there. I'm just kind of reading up on this. Bloomberg reporting French premier offers final hour budget concession to Marine Le Pen. France's government makes a concession to Marine Le Pen's party on the 2025 budget to avoid a no-confidence vote. So they got some political challenges over there in France. And I seem to remember the beginning of this year, Macron hosting a bunch of business leaders in France, basically including Jamie Dimon and so on and so forth, with basically the theme of France is open for business.
Yes, I remember our editor-in-chief, John Micklethwaite, sitting down with him there and making that overture to international business to say, look, the climate here is different, things have changed, but what you really see here is the parliament at loggerheads, and it seems like this huge deadlock on all flag. Our colleague Caroline Conan in Paris had to sit down a first, I think, broadcast exclusive with the French finance minister, who is taking a firm, aggressive tack here in the face of all of this. So something definitely to watch here as we see what happens with Europe more broadly.
Exactly. We saw a lot of the London finance folks go to Paris, among other European countries, upon Brexit. But you just wonder, how pro-business can they be given the strength of some of the institutions there, the unions and so on. But we'll see that right now. Some euro weaker, 1.05, a little bit weaker on the day. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This futures report sponsored by IBKR. Markets never sleep and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got a little movement in futures. This is after stocks finished the holiday shortened week with another record on Friday. You had the S&P 500 that notched its best month in a year, posting its 53rd all-time high of 2024. Then the NASDAQ 100, strongest monthly gain since June. NASDAQ futures right now up 0.2%, 43 points. We have S&P futures, little change, down just a fraction. Dow futures down about 52 points. We have the 2-year yield, 4.21%, up 6 basis points. The yield on the 10-year, 4.22%, and that's up about 5 basis points. We have Brent crude up more than 1% at $72 a barrel. WTI crude $68 a barrel. We have spot gold higher at $2,648 an ounce. The Bloomberg Dollar Spot Index up about 0.5%. We have the Japanese yen, euro, British pound weaker. A few companies making news. Super Microcomputer. It says a special committee has found no evidence of misconduct on the part of management or board. It also announced it's going to replace its CFO. Shares of SMCI up about 20%. Actually, right now up about 18%. And some news in the semiconductor space. Also, the Biden administration unveiling new restrictions on China's access to vital components for chips for AI. Shares of NVIDIA right now they're about little changed. And Amazon founder Jeff Bezos joined Samsung, investing $700 million in an AI chip startup. That's with hopes of taking on NVIDIA. We have Tencent. It's valued at $2.6 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, and we are streaming live on YouTube as well, so you can check us out there. Workforce today, I've got 3 of my 4 offspring that are work eligible are gainfully employed. I can report that.
Congratulations, very good.
But it's a different world. And when I was 26, 27, 28, I was young on Wall Street. We were working 80, 90-hour weeks, and that was it. We didn't even ask why. We just did it, collected our money.
Getting there early and staying late.
Yeah, I mean, working weekend, it's a different game now. And I'm not saying it's better or worse, but it's a different game. And I think there's a lot of issues impacting the workforce, namely, where do you work? Mm-hmm. And now with Gen AI, how do you work? Yep. Kim Billiter, she is the Global People Consulting Leader. Some consultant somewhere thought of that at EY Parthenon joins us here. Hey, Kim, thanks so much for joining us here. I'd love to start just by your work when you guys talk to your clients about how their workforce is evolving. Let's start with Gen AI. That seems to be kind of the big theme trend over the last couple of years, impacting all sorts of businesses, including how people work in the office. What do you find when you talk to your clients?
Yeah, well, let me start with first, we've had 5 editions of our Work Reimagined survey, and we just had one released, and it's going to inform a lot of probably this conversation. So we had over 17,000 employees that were surveyed and canvassed, as well as 1,600 employers globally, 23 countries, and 27 industries and sectors. So a lot of rich data. And I would say, to answer your question very directly, is we have found in that survey that the workforce and utilization of Gen AI has really surged at 75% versus last year was only at 22%. So it is dramatic. And not surprisingly, the tech industry, tech sector is at 90% of the workforce is using Gen AI. And some of the other sectors are lower, with probably government and public sector being down at about 60%. So you've got, a wide range between that 90 and 60%. I think the net positive kind of review of employers by their employees is really, how are you embracing it, believe it or not, in terms of the AI pieces? Are you getting training? Are you getting upskilled? And what does that actually have in terms of reflection on the organization? So there is a lot wrapped up into this. And I would say that those employees that are really gravitating and really kind of getting into the Gen AI space of this are also those employees that are going to be more likely to actually leave your organization in the next 12 months. They're looking for this upskilling, reskilling. They're looking to add value. They're looking to use those new skills. Mm-hmm. So employers really need to grasp that and really go headfirst into this Gen AI piece as well.
Kim, do employers know what they're doing with Gen AI or what they want to do with it. And I think just about my limited interface with it so far, it was playing around with ChatGPT when it came out. I got a new iPhone. I see Apple Intelligence there. It's now summarizing my emails. It's sort of seeping into my daily life. Is that sort of how most of us are experiencing it, or are there companies now who are, developing strategies and really implementing them? So how far along are we in that process?
It's interesting because I think every organization is at a different place. Those that are in the more mature places are really providing very structured ways of, this is a portfolio, this is how we're going to use Gen AI, this is the training that you're going to get, and here's how we're going to measure that. More organizations are more in that moderate to average usage. And I think it is more about, really throwing some chat GPT, some Copilot at folks and saying, here, try this out. And I personally think more organizations are going to find more success by being more structured with what they're looking for. I think the other thing that organizations are going to do as they move into a more mature space with it is you're going to have to work on culture, going to have to work on trust, some of the softer things, because some of that population, depending on which generation you're in, may actually then say, oh, I'm going to lose my job to AI. And I think that paradigm has to shift. That I'm probably not going to lose my job to AI, but I may lose my job to a person who is actually more embedded and embracing and learning more about AI. That's a very different mindset and model. And organizations need to understand this is a portfolio long-term play. It's not a go at a process or go at a particular area and think you're going to have a lot of synergy. So that's why I think it takes a lot of strategy to actually move your organization forward and not only have the high numbers of usage of AI, but actually to have that over time, because those high spikes of usage typically start to wane after a few months if you don't have that strategy, to your point, in place on how they want organizations to use AI.
Kim, I know that Gen AI is the issue of the day. I have to go back to one that's a little bit maybe on the back burner, which is, how are people working these days? Are they coming into the office? Do we have a new normal? Is this still an evolving thing where companies are trying to figure out how many days per week their employees should be in the office?
We are still at a place for what we like to call the knowledge workers. They still want to be remote 3 to 4 days a week. Employers are generally on the other side of that and would like to see their folks in the office more than the 3 to 4 days remote, right? So getting that balance right. Some of the surveys that we've also said is, a couple of days in the office really will drive engagement. So I think we have to find a right spot, but there are so many things wrapped up into that. I still maintain that flexibility is a currency. In terms of, yes, you got to have compensation, but the flexibility of where and when our employees are going to work is going to matter. And culture is going to matter. And while our survey has also said that culture is improving, I think the employer side of this is actually thinking that it's improving much more than the employees. So we've still got a mismatch. The other thing that's playing into this is if you think about the offices, a lot of organizations had moved to more collaborative spaces, more of a hoteling model versus actual personalized offices that you go to every day. And that is playing into this. How do you get to the social aspect? How do you get engagement with the organization? So I think, one of the things as employers grapple with where they want to ultimately land on hybrid and how many days in the office, those kinds of things, it really is looking at what are some of the things you're going to do with your work site itself, your design of your space, how's that going to be utilized, what kind of amenities will you have, what does the footprint look like, and really maximize the investment that you're making and really driving some of those cultural aspects to drive engagement, which ultimately, hopefully will allow your folks to, not be doing this quiet quitting, if you will, because we've still got, again, 40+ % of folks that are actually saying they will move to another employee or quit in the next 12 months.
Yep. All right, Kim, fascinating stuff. Kim Billiter, Global People Consulting Leader at EY Parthenon. I find it interesting that, we're almost 5 years since the beginning of the pandemic, yet corporate America hasn't really, it doesn't feel like corporate America has found a new normal. That
no,
we're still
they
grappling,
haven't coalesced around something in particular, and I wonder if that just varies by geography as well, certainly by sector. But
yeah, I mean, 3 of my kids in the workforce, their age range 25 to 28, they can't even conceive of a world where it's 5 days. They can't even conceive of it because they kind of came into the workforce just as this thing was kicking off. And so it's just interesting. It's a different mindset for a lot of folks. So again, one of the things still trying to figure out here. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report is brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with the new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, we've got stocks coming off the S&P 500's record close on Friday. Traders also looking ahead to the U.S. labor market data later this week. And not forget, there's also that crisis swirling around the French government deepening. How will that affect the markets on this first trading session of December? Let's get right to it with the S&P 500 up 0.1%, about 7 points at 6,040. The Dow, little changed, up about 51 points at 44,964. And the NASDAQ up about 0.2%, 40 points at 19,260. The two-year yield at 4.22%, up 7 basis points. The yield on the 10-year 4.23%. That's up 5 basis points. We have Brent crude at $72 a barrel. WTI crude $68 a barrel. We have spot gold higher at $2,646 an ounce. We have the Bloomberg Dollar Spot Index up about 0.5%. The Japanese yen, euro, British pound weaker. We have Bitcoin down nearly 2% at around 96,000. That is your Bloomberg opening bell report. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Well, one of the key elements of President-elect's economic policy is tariffs. And the question is for a lot of companies and CEOs and boards, and how are they going to deal with a world where tariffs may be a pretty big economic policy of this government? How does it impact their business? A lot of folks are thinking about this, including our next guest, Melissa DiDonato, CEO of Kyriba, joins us here. Melissa, thanks so much for joining us here. What are some of the conversations you're having with your clients about a world that may involve a lot more economic tariffs?
Thanks so much for having me. A world of economic tariffs with Trump. That is the big discussion on all of our customers' minds today. And what it brings to us is that very big V word, volatility in global markets. We're seeing heightened language around the BRICS countries in the US, obviously, unsettling the markets, causing volatility. The threat this past weekend, 100% tariffs in countries in BRICS. Well, that's going to be a problem for a lot of our clients, a lot of our global customers around the world that need to move currency around the world. The impact of that volatility on the strength or weakness of the US dollar, what it means for the global markets, it's all very, very unknown. But what it does do is increase the lack of trust, increases uncertainty, and we've got definite instability already occurring in the global market. So our customers begin to look at what are the strength of the dollar? What's going to happen? How is it going to impact businesses? And a lot of businesses are going to be impacted, and a lot of the winners and losers are becoming already a little bit clear. So the Mag 7 companies like Apple, Microsoft, Amazon, Google, et cetera, they're probably come out as strategic players that are going to win in the economic landscape, primarily due to a couple of things. One, which is margin expansion, and the other one is around resilience, around earnings. So, we're already seeing lots of question around that V word, volatility. What's going to happen in the markets? Where do we move our capital? Do we keep it in dollars? Do we move it to euros? Is there going to be another currency emerging? A lot of volatility causing a lot of concerns at the moment.
Melissa, I think something that a lot of us are doing here is looking back at sort of how this played out during the first Trump term. And I wonder how much that playbook is applicable to corporate executives this time around. I think about tariffs in particular. There was this effort to kind of find carve-outs or exemptions when it came to trade policy where they could. We've seen some of these big companies, the heads of them, meet with the president-elect in advance of him becoming the president once again. How much do you expect to see sort of the same playbook being used this time around that we saw back in 2016?
If we use the playbook from his first term serving as U.S. president, that is a playbook we're going to see a lot of reference to, for sure. We saw the most volatility in the U.S. dollar during his term as the president the last time. So we're already bracing ourselves. Now, calling back the negotiations, the potential tit for tat that we're expecting for, when companies, businesses, organizations get caught in this Washington's crosshairs, if you will, is already becoming relevant. So I think we're going to see a lot of reference back to the beginning. And in fact, you've seen a lot of press, even Bloomberg here reported yesterday, over the weekend, about reference the previous term. If we look at what he did before, we're going to see reference that again. And we're going to look for trends so we can try and equate to what will be his mission going forward. But for sure, referencing the past to predict the future is definitely a path everyone's using today.
Melissa, when you talk to your clients in the C-suite, do they anticipate trying to pass along any increased costs that they incur because of tariffs along to their consumers?
A little bit of both. What we should expect is probably a split. What we're seeing around, if we look at, let's look at the Mag 7 as an example, right? I mentioned 2 points before, 2 critical factors in what's happening. Margin expansion and earnings, resilience. So if margins have surged with the Mag 7 from 17 to 24% since early 2023, that shows unprecedented financial resilience for them, right? And that margin growth means they could absorb currency fluctuation costs more effectively. So we're okay there. They can maintain competitive pricing during the point of volatility. So we're okay there. And they can invest in strategic global market positioning. Now, when it comes to earnings resilience, with more than 20% year-over-year earnings growth in Q3 alone, right? They demonstrate an incredible, maybe even exceptional operational adaptability. So what it means is that for the winners, they're going to continue to win. We're not going to see having to pass on any of the issues, and they'll continue to have that 20% year-over-year earnings growth. So they'll absorb that growth aplomb, right? They're not going to need to worry about passing it on to the consumer. However, there will be some losers in this whole mix, right? There'll be companies, we know about them. John Deere is one example, right? And Trump vowed, for instance, to impose tariffs if they move production to Mexico. Who's going to pay for that? It's not going to be John Deere. It's probably going to be the consumer. They're going to pass that on. Global giants like PepsiCo, Unilever, a lot of businesses that have invested in sourcing from Mexico, they're potentially facing heavy tariffs. We can expect that to be passed on too. When we look at the loads of companies, Coca-Cola, Chiquita, Constellation Brands as an example, importing Corona and Modelo, Pacifico from Mexico, they're going to be slapped with tariffs. They are going to be impacted and they are going to pass it on to a consumer. We look at small businesses, right? They literally cannot absorb the increased cost around when their margins get thinned. I mean, they just won't be able to do it. Operations that have, tariff-like countries could launch some companies, that boost U.S. operations so they could win. Are we going to get that to pass on? Yeah, we're going to get the pass on the negative side, and we're not going to get any benefits for the Mag 7 who continue to accelerate in their growth.
I want to ask you a question about zeitgeist, to borrow a phrase from Tom Keene, who's off today. And I know you spent a lot of time in London. You're dealing with multinationals, but I'm curious just about how the brand of American exceptionalism that we're bathing in here in the U.S., and certainly something that's being promulgated by the president-elect, resonates globally. How are companies, how are executives reacting to what's really motivating a lot of the policies that the president-elect is saying he's going to put in place? How do they see the role of the U.S. changing when it comes to global business?
So they're worried right now. I mean, I'm, as you can tell from my accent, I'm American. I spend my time between Paris, London, and New York. So get a real vision for what's going on in the global markets. A lot of our, 50% of our business that's out of the US. So what I hear a lot when I'm talking to CFOs, CEOs, and executives around the world is what is going to happen to their business? What's going to happen when we have to export from Europe into the US? Technology and software. Well, the one thing that's for sure is that, the area we have to worry least about potentially is the UK, or so we think in the UK. Let's see what happens over the first 100 days, right? But certainly as we begin to move farther east there's greater and greater concern about what's going on. And how does the U.S. being positioned? There's clear support for the U.S. and wanting to get into the U.S. and sell into the U.S. markets. I mean, when you look at, Mexico and Canada, the #1 area for export, a big part of our business for sure sits inside of both countries. We have a business even in China. How are we going to be able to, continue to do business in these countries? It's unknown. So what do they look at? And when they look at the U.S. Strength and weakness as the proposed tariffs begin to have much more of a reality, and the repositioning the strength of the dollar, it is unknown, and it is concerning for sure.
Melissa, do you and your clients expect a heightened level of M&A activity? That seems to be one of the narratives here with a new administration and a Republican Congress.
In short, yes. The data tells us a compelling story. When liquidity rises, deals follow. Over the past 5 years, our, Kariba, we've done analysis of it around, cash, liquidity, and M&A. And there's a very strong correlation. M&A, IPO, and PE transactions. We saw this correlation peak in 2021. 2021, we saw 8.5 transactions. What's fascinating is the coiled spring effect we're now seeing. Liquidity levels are matching 2021's peak. So 3.5, call it trillion versus 3.653, just a little bit more trillion. But the transaction volumes in 2023 were about 2,000 deals lower, right? So what we're seeing is not the fact that the liquidity is not there, because it is. The trends are proving it. We can see it. The data shows us. What we're seeing is a mix of market psychology and external pressures. Geopolitical tensions, monetary tightening cycles, and ongoing uncertainty have kept companies into that wait and see mode. Yep. I mean, we just announced last month that General Atlantic was going to be a minority investor in Kariba. We're seeing this pipeline, the deal pipeline growing. I'm predicting that pent-up liquidity. I'm suggesting that deal pipelines continue to surge. And as soon as we get some stabilization in the economy, after the first 100 days with Trump, you're going to begin to see more M&A. Not IPOs quite yet. Let's not get there yet. IPOs later in the year, but I think the first half of the year, going to see a slow release of M&A. By the middle of the year, it's going to start to accelerate again.
Melissa, thank you so much for joining us. Always appreciate getting a few minutes of your time. Melissa DiDonato, she's the CEO of Kariba. Talk to us about corporate world, corporate America, and global corporate environment in a world of a second Donald Trump term, which starts in 2 months. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. David, Lisa. President Biden has reversed course and signed a sweeping pardon order for his son, Hunter. Bloomberg's Kevin Whitelaw says Biden appears worried about what would happen to his son under a Trump presidency.
President-elect Trump has stated that he thinks the Justice Department was sort of weaponized against him, citing the various prosecutions and investigations into several different aspects of Trump's first term and surrounding events. And he's with a set of loyalists that he's been appointing to these key positions and talking about installing. I think President Biden just decided that he couldn't take the risk that his son was going to be part of sort of some ongoing prosecutions, etc.
Bloomberg's Kevin Whitelaw. German Chancellor Olaf Scholz is visiting Ukraine for the first time in more than 2.5 years. Scholz says Germany will give more military supplies this month, totaling 650 million euros. A holiday travel record has been shattered. The Transportation Security Agency says it screened 3,080,000 passengers Sunday, beating the previous high watermark by more than 60,000 travelers. Cyber Monday, it is here. Retail analyst Bert Flickinger says people will be buying clothing and gift cards the most this year.
About 350% more people will be shopping online than in stores.
Flickinger says while there will be good deals on TVs, there will be even deeper price cuts after the new year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Hi, Michael Bloomberg. Michael Barr.
Hey, I take that as a
You'll
compliment.
take that any
That's
day.
a compliment.
That's
man.
why you're walking out the door here with a shred of Michael Barr. Thank you so much. We appreciate it. Red headline across the screen here. Barnier pushes through a budget here, which, I guess kind of risked his government here, I think, a little bit here, David.
Yeah, we were talking about this just a little while ago, pushing through this budget, and it looks like there isn't a vote. So this is a Social Security budget, and this has obviously been hotly contested in France, and is sort of leading to, as you say, maybe a lot of chaos in the government of France. And something we're definitely going to chart here over the course of the day. But a tense political scene.
It is over
Paris.
there in France. French government adopts Social Security budget without a vote. So we will have more reporting on that throughout the day. But again, looking at the euro here, we are weaker today, 1.0484, so below 1.05 weakness in the euro, reflecting some of the uncertainty on the French government. S&P 500, it is up 7 points. The Dow is off 78 points, and the Nasdaq's up 114 points. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks mix, traders getting ready for a lineup of economic data this week. Also, more Fed speak on top of that. We'll start with the Nasdaq, up about 0.6%, 122 points. We have the Dow down 0.1%, 74 points. We have the S&P 500 up about 0.1% or 8 points. The two-year yield, 4.23%. That's up 7 basis points. A yield on the 10-year, 4.23%, and that's up 6 basis points. The Bloomberg Dollar Spot Index up about 0.7%. We have the Japanese yen, euro, British pound weaker. Bitcoin down about 1% at around 96,000. We have shares of Intel. They're up about nearly 3% right now, and this is after announcing the retirement of its CEO, Pat Gelsinger. Then you have Stellantis also seeing a change in its leadership. Its ADRs down about 7%. That's after its CEO, Carlos Tavares, his surprise departure. And finally, shares of Tesla. They're up about 3%. That's after an upgrade from Roth and also Stifel, boosting its price target. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Caroline Hyde joins us. She is a host of Bloomberg Technology. There's been some technology news here this morning. I mean, Caroline, you come in on Monday. Let's start with the one I didn't see coming, but maybe I should have seen coming. Intel CEO Pat Gelsinger stepping down. What's going on there? Because I know they're trying really hard to figure out where Intel's going to be in this world of AI.
Precisely. And just the share price reaction over the course of this year and more broadly since he came in 2021, his own stock is down 60%. At the same time, Nvidia's is up more than 800%. Wow. And AMD has also outperformed. That sort of tells you the entire story of the demise of what had been the key chip maker. Still, the US hopes it to be a key chip maker. Why it's been getting so much money from the CHIPS Act to be able to building and creating, manufacturing, foundering chips here in the United States. Vital Knowledge has a nice way of putting it. They said it isn't necessarily a shock that Gelsinger is departing given the firm's huge missteps, but the fact that his departure is coming now in the midst of this huge restructuring they only announced back in August isn't a great sign. Rosenblatt Securities saying it's indicative, in our view, of faster deterioration of the fundamentals and the product roadmaps.
Where do things go from here? So you described that restructuring and the predicament that Intel finds itself in, where it's competing, if you can use the word, against NVIDIA and these other rivals. This is a company that is trying to do both design and manufacturing, both of which are kind of extremely difficult things to undertake. Does it have to pick one or the other? How long is it going to take to do that? And now you have this kind of split interim CEO role overseeing the company.
Doesn't
where does all
always
this
go
lead?
well,
Where does
that.
all this?
That's-
No, rarely does. Where does it all lead as you see it?
Well, it looks as though product is going to be at the heart of what they're trying to straighten out. And that's why Michelle Johnston Holthus, who's known as MJ, is being given the new role of CEO of product at the same time as interim co-CEO. She's been at Intel forever, 3 decades. She's been a lifer there. Meanwhile, David Zinsner is basically the CFO, the guy who's got to make the money make sense because they're trying to become leaner, meaner. He's a CFO, actually only been there a few years. But I think this is a company that needs to decide where it's going to fight. Because remember in August when they had that horrific sell-off in their shares after they announced the restructuring and some dismal numbers. Restructuring was all about, yes, we're sticking to fabrication, but we're actually going to sort of make that a different part of the business. It's going to have its different sort of operating functions and board overseeing it. We're actually pulling back and putting on ice any of the build out we were doing over in Europe because the numbers are looking so bad. But they were still going to be making a big presence in Ohio, in Arizona, here in the United States. So the question is, do they stick to the foundry business? Do they start to sell off? Remember all those rumors and reports from Bloomberg that Qualcomm, that even ARM, the chip designer were interested in parts of the business. Many had felt that was on ice because the board was still supporting Pat Gelsinger with him on the outside. Then also what happens to some of the other sales he'd been thinking of. They were trying to make money on a chip investment that they'd made back in a few years ago. They were selling off some part of that unit or at least IPOing it. And also, this is at a time where they're losing 15,000 employees, 16,000 in fact. It's a very destabilizing time for Intel.
It sounds like, just from the outside, that maybe they should look outside the company for a new leader. Maybe somebody who has NVIDIA type background or Taiwan Semiconductor, somebody who's really coming from a company that seems to be getting it right. Is that a discussion point for them?
I think that certainly they've put together a team to try and find an external candidate. It's not to say that some of the interim candidates wouldn't be a longer term choice here. What was interesting about Pat was he was actually an outsider.
Okay.
He'd come to Intel in the 1979. In the 80s, he'd been at the heart of actually like producing their microprocessors. He then was the CTO, but he left to go to VMware, which was purchased. He then came back. So he had outside expertise. Will they then seek that out once again? I guess that will be dictated by which area of the business they lean into, whether they try to do all things to all people, and also what the government is going to be telling them at the same time, I'm sure.
We're looking forward here, but we should look back as well. And I'm curious, when the book is written about what went wrong at Intel, was it a particular moment? Was it not getting as wholly into mobile as it might have? Was it simply just misjudging how big a deal AI was going to be? Sort of how did we see that race lost so spectacularly to NVIDIA, so it seems it has?
I think it has to all come back to AI accelerators. The fact that Gaudi, their offering, is
Haven't
going to
heard
miss.
of it. I'm just joking. But I mean, it's like, but we don't know it as well as the rest.
They're going to miss their internal targets of $500 million sales this year. 500 million sales compared to $5 billion target over at AMD, and $100 billion likely to be made by NVIDIA. I think the big misstep is going to be not seeing AI, generative AI, and being able to offer that. Instead, trying to restructure in different areas. Pat Gelsinger himself said this was the biggest restructuring and turnaround in at least 4 decades, but he really thought that he could do it.
And it kind of begs the question, why did the United States government choose to partner with Intel, which is a company that seems on its back?
Other than
it's an American company.
and so is NVIDIA, even though, of course, Jensen Huang is from got Taiwanese background, so does Lisa Su over at AMD. But these are all American companies, but not many of them are manufacturers. Micron is, of course, and they too have been winning some of the CHIPS Act money to be able to continue to build out in upstate New York, for example. But really, Intel was the one everyone was still proud of. It's not been long since they fell from grace. I think the story would have been an amazing comeback story.
Yeah. I remember seeing Jensen Huang last year at the Deal Book Summit that the New York Times ran, and he talked about sort of how long it would take for us to have the kind of manufacturing capacity or the foundry capacity here that you have in Taiwan. And it was measured in many wears. It wasn't as though that was we're on the precipice of that happening. So could you just step back and look at that landscape and tell us sort of where we are? And we've talked about the CHIPS Act and the money that's gone to Intel. How close are we to, if not parity, sort of making it so that more of these chips can be manufactured here in the U.S.?
At least 4 years.
Yeah.
I think that's, with all this money, and $39 billion, extraordinary amount really to be given out by one particular area of government. But every single analyst investor we have on is like, this is not happening tomorrow. Ohio is not suddenly pumping out these incredible bits of wafer overnight. It takes, and this was Pat Gelsinger's frustration. He came on and told my wonderful co-anchor Ed, who's currently out on paternity leave, he told him that he was getting frustrated that the money taps weren't turning on from the US government. He wasn't getting the money, but that's ultimately because they had to get through certain hoops to be breaking ground, to be attaining certain manufacturing targets to get the money in from the government. So I think these things do take an extraordinary amount of time. And remember, TSMC, the standout performer of chip creation, is building here in the United States, and it was having problems because it couldn't get the talent. This isn't just about buildings, this is about IQ, about ultimately training here in the United States to get the right talent base to be able to work in these chips.
Yep, amazing. Intel stock's up 2 or 3%. It's not a good sign when you get, you resign, your stock goes up. Caroline Hyde, thank you so much.
That you'd want to get.
Not the goodbye gift.
CEO.
Caroline Hyde, she covers all the technology stuff for Bloomberg Television. We appreciate that, getting some update on what's happening with our friends at Intel. And again, the CEO stepping down. Presumably a search is underway. My boy Frank Gehry, he's working on that, I guess. So we'll see how that plays out. What are you looking at today for the rest of the day?
I'm very curious to watch what's playing out in France unfold and sort of trickle across Europe and around the world as well. I mean, we've focused so much, as I said to one of our earlier guests, on the fallout and ramifications of the presidential election here in the U.S., but there's plenty of political instability in Europe, and I think sort of seeing how that shakes out will be something meriting my attention today.
Yeah, exactly. We've had a lot of focus on Washington, D.C. We're going to have the Fed coming up later this month. Earnings we're pretty much done with. So again, it looks like the market's going to focus on macroeconomic data and Fed movement here. We're going to have more coming up. That's it for Bloomberg Surveillance. Bloomberg Intelligence coming up in just moments with Alex Steele. This is Bloomberg.